Good afternoon, sir. How's it going?
What's going on, brother? How was Paris?
Paris was fun. I was I was at a conference the first 2 days for Ledger, and that was good. It went well. And then I was very touristy my last 2 days. I saw the Eiffel Tower, the Arc de Triomphe. I ate a lot of croissants, had some baguettes. It was pretty good, man.
I saw it was snowing in Paris and London at the same time, I don't know, like 3 days ago, and I was like, that's kind of rare. They rarely get snow.
Dude, it's so cold in Paris. It is frozen. It's like tundra. But it's okay. It's okay. I braved the cold. It was worth it to see the sights. Next time I go, it'll probably, hopefully, be in the summer. So hopefully things work out pretty well there. How about you? Everything been good?
Been great, man. Just survive in advance kind of market. It's a whole lot of chop, but we're living through it. Day by day.
The chop up until FOMC today was, I mean, that was some top tier chop right there.
Yeah, Book and I were talking about that. We said it was like SPY just had that bid all day because we took some puts up at that 404 resistance. We took SPY puts for Powell, like just small size, and we were talking about it's like, dude, this SPY just has a bid all day. And then obviously we saw that big candle down, but it was just just in that range still.
Yeah, I think that was pretty interesting one, and SPY's in a super interesting spot now, having fallen back below that key trend line as well as the 200-day SMA. So a lot to go over. I know that you guys have limited time, so I'm going to go ahead and get right into it. I also invited a few other speakers who will probably be joining us, some of them during while you're here, some afterwards, just to kind of supplement the space once you guys have to pop off. In the meantime...
For sure. Wolf, how are we, man?
Dude, doing good.
Did you trade it all today?
A little bit. Mostly just SPY.
Yeah.
Just some SPY puts on the way down.
It was that morning vibe was interesting. We were trading up, but like in a super like weird choppy manner, I think. And then we quickly got up to 403, 404s, and that was a tough spot for me to try to go long up near that 405 supply with FOMC still ahead of us. So I really didn't do anything all morning, and then caught a couple downside trades after the rates decision. But I made one trade this morning, and it was like a $200 lotto. So it was a slow morning, but managed to find a few spots in the afternoon at least.
Love it, man. I think that's what today was about, was definitely picking your spots. So let's dive right into it. Mans, I want to start out with you because we didn't have one of these last week, and just kind of get a little bit of a recap of what's been going on in your portfolio, the way that you've been trading over the last week or two, reactions to CPI, FOMC. We've had a lot of stuff going on. And while you're doing that, I'm going to go ahead and tweet out the space, and if anybody's able to share it, that'd be awesome.
Yeah, no, absolutely. I think, the last, week and a half has been very interesting, right? Because we had that big move up on the cooler than expected inflation report. But I mean, as everyone saw, we hit 414 in pre-market, and we were at 401 by the end of the day, right? So that is not necessarily a great sign, in my opinion. And as you mentioned, Wolf, we just cannot seem to get over that bear market trend line, right? Which is that massive trend we've been in since our all-time high. And so until we're over that, it's really hard for me to have a more broader term long side bias approaching each day. But, really what I've been focusing on is just kind of going back to my roots. I think one of the biggest things right now that's helping me is my approach every day is, in a range bound market, you want to play calls at strong hourly support and strong daily support, and you want to play puts at strong hourly resistance and strong daily resistance. And that's pretty much what I've been doing, right? I've been trading Netflix, Tesla, and the S&P every single day. And I swung some Tesla puts over this past weekend on Friday because it came up to daily resistance at 183. Those puts ended up going, I think, just over 1,000% early today when Tesla hit 155, 154, or down towards that 157 area. Anyway, I think they went from $1, which is my entry. I swung the 160 puts, and those were, in the money today, deep in the money. So that was probably my best trade over the past couple of days, and ever since just been, Tesla puts, Netflix puts, and then today Book and I took some SPY puts early in the day. So just been grinding and lowered expectations right now with the chop that we're in, and until we get out of this range, that's the motto right now.
Yeah, I think that makes sense. Definitely was in tune with that video that we actually put out that we cut up from that clip that we did together where we're talking about just taking those quick wins. Have you found yourself even just quicker than normal? Because I know a lot of times what I really admired about your style was, using those 15 minutes, having a little bit more drawn out. Have you gone down to the 5 minute at all? Have you,
Um,
profit
so
any?
so somewhat, I would say a little bit, but honestly, like to give you an example, my two best trades was the Netflix swing, with the Tesla swing on Friday, which I admittedly sold early. I sold at 100%. I mean, like some people in the Discord held to like 1,000 or 600%. But but it was a great trade. It was one of my biggest trades so far this week. And then my other big trade was yesterday. Netflix gapped up at resistance in the morning at that daily resistance at 3:30. I bought puts there, and I actually just sat in them pretty much the whole day and took one other trade the entire day. So but like today, like I was in and out of the Netflix puts that I took during FOMC in 7 or 8 minutes, right? So it's really just I think about the day and like where we start the day. If we gap up into resistance early in the day, I have more, like yesterday I went on a walk, got coffee, got lunch, and I just sat in those Netflix puts all day, and they paid fantastic. I think they went 150%. So I think it just depends on the day. But yeah, definitely having to prioritize locking in gains if you're short, covering, being proactive, and just see green, take green. And like I said, the most important thing is just using those hourly and daily support and resistance levels and understanding in a range bound market. You have to, switch between those calls and puts when you're at those respective spots.
Does the new rate hike, in addition with, I guess, lower CPI, which kind of pushes them towards, hey, we're going in the right direction here. We need to continue rate hikes. Do those things there um, lean you away from certain growth companies? Are you leaning a little bit more negative bias on the market?
I would say my bias towards a lot of the large cap tech names, the consumers, and the names like again like Netflix, Tesla, some of those names that trade at higher valuations. Even though Tesla is now trading at its lowest valuation I think ever, but point being, like, yes, in a sense, I'm approaching it with more of that. Like my ideal trade and what's been working best has been playing puts off of strong hourly and daily resistance. Not to sound like a broken record, but that's just kind of my motto rather than like, in over the summer we had so much great volatility and growth names like Roblox and Coin and some of those other names, but they're just range bound right now. If you look at ARK, it's been hit 35 for 3 months. So it's like when there's that limited range, I'm obviously going to be trading different stuff on my daily trader list more often. Does that make sense?
Yeah, that definitely makes sense. Good stuff. I want to bring Book into it real quick. Mans, D-Book, Paper Gains, tagged you all in some tweets about the space. Appreciate anybody that has retweeted or shared. Shout out D-Book and anybody in the audience as well. Comments are much appreciated. If you have questions also from the audience that you want asked up here, the best place to throw those in is going to be into the Spaces chat, so you can comment them in there or at the tweet that is up top. Or you can DM them to me. A lot of options here. And then maybe towards the end of this, we'll take some questions from the audience too. D-Book, let me bring it to you. Get some initial reactions to CPI, FOMC. I know you traded very light today. You can walk me through kind of how you're looking at the rest of the week as well now that those major events are out of the way.
Yeah, and I'm really glad that they're out of the way because I've been waiting on them for a while now. I really haven't been super aggressive with my position sizing. I don't think I've put on like a full size position in over 2 weeks right now. It's been definitely a slower period for me over the past few weeks. Like I've been saying, I feel like every week on this space just because this market's not great for my kind of style. I'm not great at trading really aggressive moves up or really aggressive moves down, and then flipping my bias completely intraday and trying to trade the move back down or up. It's like a game of ping pong lately, and it's not one where you can just get a good entry on something and then just really sit in it all day or check back like later in the day. It's not that market. We're not seeing much continuation still, and so it's definitely been not the best market for my style, but Mans is a lot more skilled at kind of that momentum trading and flipping intraday. So he's been super helpful, and I'm definitely leaning, I feel like, bearish into the rest of the week for sure. I think that it's going to be difficult for the market to sell off this week because it is the monthly options expiry on Friday, those 12/16 calls and puts expiring on Friday. So when you think about that, and then you think about the demand we've got on SPY, really a ton of support around that range. I think it's going to be difficult to have that unwind this week, and I think that if it's going to happen, it's probably more probable into next week, and that's the way I'm leaning right now. And you touched on the growth stocks in a rising rates environment, and one of the two positions I have overnight right now is Rivian puts, and I totally agree with that stance there, with Tesla being completely dead. I don't know if that thing's ever going to come back. I think that Rivian and companies like that are pretty vulnerable. And then you talk about like two different markets we have going on right now with a bunch of stuff trading near all-time highs still. And then you look at something like Rivian, it's a really widespread market, and it's something where I might not put on a full size position the rest of this year, and that's something that I'm okay with because I need to see us break out of this range. Do you ever think, Wolf, that we will exit this range on SPY? It might be next year.
Well, next year's not super far off. I think
It's 2
like
weeks.
like 8 trading days or something. So
Yep. And I don't know. It's just I think that with that monthly options expiry on Friday, with all that demand we have on SPY, I'm gonna probably stick to a similar, more cautious approach until we really, see either sub 390 or through that 410ish area. So that's kind of, I guess, my approach right now. And I've been sticking to a lot of SPY lately too. I think that narrowing my focus down super heavily has helped too. It's already a difficult market, so I think it's only more difficult on myself to watch 6, 7, or 8 tickers. I've been watching SPY and one or two others, so I've been trying to stay focused and definitely looking down right now, not up.
D-Book's being humble. His SPY puts printed like crazy today, and I sold at Phil. So
Yeah, I did add SPY puts at 400 after the first lottos printed 100%, and then the next trade also ran 100% right after. And I'm acting like I did absolutely nothing today, but it's just such small size positions right now because I don't feel comfortable risking meaningful capital. And maybe if we see a lot of range on SPY in the next week, you don't really need huge capital risk to capitalize on these moves. So we'll see.
love it, guys. Paper Gains, just wanted to pull you in here as well before we dive into a little bit more SPY and QQQ stuff. Any thoughts you had on some of the events over the last couple of days?
Dude, my thoughts right now are like, I swear D-Book and I don't actually trade together, but like I took those exact same trades today. Like again, Rivian short. SPY had a little bit right at that 405. Anyways, a little bit, but it was a hard, and to everything everyone's saying, it's like spot on, right? Like it's the capital that I'm willing to risk right now is significantly lower. I mean, I see the trades, but the difficulty, and I'll just speak for myself right now, that I'm really, really having is that, you guys talked about earlier, it's my trade plan. I typically have, so I run like a 85, give or take, average win rate, with my average win being about 100%, and average loss like 30%. So that means that I typically try to take profits over 100%. I'm not the guy that normally takes profits at 20, 30%, but right now, like that's kind of what's been going on. And it's super tough for someone like me because it's like, is it even going to be worth like really trading? It's tough, man. It's tough. And so, like on an FOMC day today, which was probably one of the, it was not a super fun FOMC day today for me because, like, I'm very sensitive to IV, and I knew that these cons were so inflated coming in and just watching them. And I got the same exact moves, right? Like that, I think it was like first pop to like 403 and then rejection, and then something else like that second 400 rejection again. But the cons went from like, I don't know, sub $100 to like $1.60 plus for me in a matter of, I want to say like 1 minute or less. It was so fast. And so taking profit, that was actually pretty challenging. So like,
yeah, no, you
I
really
might be able to.
when the cons, it's like you have to sell whenever you get that move on a day like today when the cons are wildly overpriced. If you get a decent entry and you get that move, that 30, 40, 50% move, I think you just have to take it, because the longer you sit there, especially in zero DTEs, the more IV draining out of them. The day's getting later. You got to sell the moves on a day like today.
Real quick, Mans, I know that you have pretty limited time. You let me know you have that conference call coming up. Would you be able to, Paper Gains, I'm going to come back to you in a second.
Yeah.
Mans, would you be able to share your top setups or just stuff that you're watching? Because I feel like day after FOMC, day after CPI have been specialty days.
Yeah, absolutely. And it's going to be a pretty limited watch list for me, because one of my vices when the market is like this is sticking to 3 names. And right now that's Tesla, Netflix, and SPY. So for me, it's going to be an hourly breakdown on the S&P 500 under 397.20. I'll be looking to buy the 395 puts for Friday tomorrow. If we get that breakdown under that hourly key level, because we move very smoothly below that level, or we usually have the past few times we've broken it. If you look at past price action. And then another downside trade I'm hawking is the Netflix 315 puts. If we get a break under 317, that has been that stronger support area. We briefly broke it today. Thankfully, I was able to exit my puts at 314. And so if we get a clean hourly candle close under 317, I'm going to be looking to take the Netflix 315 puts, probably, maybe even the 310 puts. And then on Tesla, this is an upside watch for me, actually, just because it has been down for like 3 days in a row now. If we can get over 160 and hold, or if we start to base that 157 level, I'm going to be watching Tesla for upside. And then hopefully we get a retest of like that 167 to 170 area. So that's 2 downside setups, SPY, Netflix, and then upside setup is Tesla on the break over 160.
Okay. And Tesla, are you eyeing more downside as well?
Yeah, so my ideal situation would be we get a relief rally tomorrow over 160, trade it to the upside to 167, and then reshort at like that 167 area, which was I think that was the prior 52-week low. So that's the area I'm looking for a test of, is that 166 to 167 range. So I'm going to trade that both ways. I would like to trade it both ways because Tesla's been a great trader lately. So I'd love to take upside calls, take that to 167, and then look to short hourly rejection of 167, which is that prior 52-week low.
And real quick before you pop, last thing, give me thoughts on crypto. Bitcoin was over 18K today.
Yeah, I think crypto's been showing some strength. Like I've mentioned kind of a million times, I think you're starting to see small caps show some strength. And I'm speaking towards like companies that have a market capitalization under 10 billion. And then I think like some of the growth companies too, like showing a little bit more strength. And then I think crypto just kind of falls into that. I think that we've gotten I think through some, the worst of crypto that we can get. I guess the SBF hearing just started. I think people are looking at that as I think crypto's starting to show some strength. I'll be convinced once we get a daily close over 18K that we might see 19 or 20.
Good stuff, man. I think you got a hop.
Thank you guys for having me, though. It's a tough environment, guys. Like I said, if you take away one thing, use those daily and hourly support and resistance levels, play both sides, survive and advance right now.
Good stuff, boss. Take care. All right, we're going to keep it rolling here. We got another 40 minutes of content here, talking trade setups and stuff. Nick, I saw you popped in. I think that you have about 10 minutes as well. Would love to hear any thoughts that you have on what's been happening over the last couple of days with those price action. I know you've been real active in the market.
Yeah. So, past couple of days have been good. I was really expecting a lot more today. And honestly, it could just be exhaustion from yesterday and possibly quad wishing. It is quad wishing, I believe, Friday, or is it just regular OPEX? I'm kind of losing my track here, but one of them on Friday. And then, yeah, so, I was expecting a lot more today. Yesterday, CPI, we had a nice move. Initially, nice move up. Then we just faded the rest of the day. So overall, been a good week. Today I actually went 0 for 2. Actually, sorry, 1 for 3. I traded SE puts in the morning. Only made about 15-20%, but that's still a good trade. Something to be happy about, something to be proud about. The trade plan worked. After that, I kind of just chopped just like the rest of the market did, and I didn't trade past 10 o'clock after that until about 2. And then usually, as I talk about on the spaces, the FOMC strategy, where initial reaction, and I know Gavin posted it too. At 2 p.m., you see the initial move, which is usually the fake move, and then at 2:30, you play the opposite. Today, we didn't really get that fake move. I mean that second move until around 2:45, 2:50, and it was just slow and kind of just ugly. Easiest way to put it. It didn't follow what usually happens, and not that it's supposed to follow. But just saying, this is the first time I really lost on Farm C. Nothing big. I played small, but still, things to work on and things to grow from. But yeah, Farm C was just a little slow and not really anything crazy today. Going into tomorrow and Friday, it's going to be interesting. If we chop around, which I don't think we will, but if we do, I do think some individual names will run up and or run down, and that's what I'll be putting my main focus on.
Yeah, any top names on watch there for individuals?
So for me personally, what I really notice that what works best for me is I really wait until the morning of to kind of look, because I'm trying to look for some things of strength. Um, and I used to always map it out. But truly, I just like to play what is moving the most in the morning. So, for example, this morning you could have played Doc U, W. Those are two names that are moving up in the morning. Tesla was moving down. So stuff like that, that changes every day. So realistically, I don't have anything at the moment, but that's kind of what I focus on every morning and what has worked for me.
I hear. Okay, makes sense. Appreciate it, Nick. D-Book, let me bring it back to you, and then I see we got, Desi, Michael, Paper Gains, Edgar, looking forward. And what I ask everybody is maybe to prepare some thoughts on some of your favorite setups going into the latter portion of the week, and then if there's specific thoughts as well on SPY and the Qs, definitely feel free to share those. I wanted to bring it back to you, D-Book, for a second, just to give me your thoughts on SPY and the Qs and the patterns that they're forming. I know we talked SPY really stuck in this range. I think part of that is also because a lot of money managers are toning it down for end of year. Perhaps they're outperforming SPY at the moment. They don't want to get caught up in anything, right? Maybe there's some tax loss harvesting going on. But maybe there's some thoughts here on the Qs as well. And then just any kind of general lines that you have, because I know you've been using volume a lot with those lines.
Yeah, for sure. I don't have, I don't look at the Qs all day, every day, or chart it every day, but extremely similar look to SPY, except for the fact that it's less off of the bottom is all. And I think that when you look at both of them, you've got a very similar case. And I think when you look at SPY right now, the easier zone to trade through, if we're talking $10 up or $10 down, is definitely up. We've seen that 400 to 410, what I call the highway, get ripped through now like 4 times in very quick fashion. And so I think that the easier path is going to be up. But at the same time, I think that I'm still looking down on this chart. And you look at the, one second, you look at the weekly candle that SPY's got in the works right now. It's not great. I think there's a lot of work left to be done on the SPY weekly candle right now. When you look at that upper wick it's showing, if they're not able to, trade that candle back up to probably 402 plus, and then they trade it down into the mid 390s to close the week, that's not going to be pretty at all. It looks like it's going to be on above average volume when you think about how there's 2 days left on the SPY weekly candle. And so if they don't close that like minimum of 400, at least 402 plus on that SPY weekly candle, it's not going to be pretty. And I think that, like I was touching on earlier, I think it's going to be difficult for these indexes to sell down this week, because there's just so much going on. You just touched on the end of year, maybe rebalancing, end of year trading activity from hedge funds, tax loss harvesting, and then you factor in how Friday's 12/16 monthly options expiry OPEX. I think that might pin us to 400 for the time being on SPY. And I'm looking I'm bearish right now, but I'm looking for the unwind more into next week, just because we've got so much support on SPY, really from like 397 to 393, and then you factor in the OPEX on Friday. I think that there's a potential to be range bound into the end of the week, and then I would really be looking for that that unwind into next week. And when we talk about levels, that's probably what you want to know, right? The secret sauce. Yeah, I mean it's the downside trigger on QQQ is almost too clean, right around that 280 psych level, and you've got the same thing on SPY. Like the major slippage spot is going to be right around 390, and I hate making it more difficult than it needs to be. Like 9 times out of 10, you could mark $1 or $5 increments on SPY and QQQ, and it's going to work for you. You can trade around literally $5 increments. And so I don't get crazy with the levels, but I think that there's very clear downside triggers. QQQ 280, SPY 390, and I'm probably looking there first before I'm trying to trade it up. So those are my thoughts.
Great stuff, Book. Appreciate it. I'm gonna also pop around the panel a little, but what time are you able to be on until? I know that you had mentioned to me some limits.
Yeah, no, I've got about 20 minutes here. I'm good for now.
Okay.
Hop over whenever. Yep.
Okay. All right. Make our way around. I know that, Desi, I want to come to you in just a second, but Michael Saul, you haven't had a chance to speak yet. So just go on Michael, then we'll go to Desi, Paper Gains. Come back to you because I'm excited to hear some of your plays afterwards as well. Michael Saul.
Hello, Wolf. Hello, everybody. How are you today? Hope you can hear me well. Thank you for the invite, as usual. So I love those levels that were just given on the Qs and the SPY. I think the candles that have been put in the last couple of days on the SPY shows some distribution. Now, officially, yesterday was not a distribution day because we were up on the day, so it cannot count as a distribution day, right? Distribution day has to be on a down candle, but it was a pretty nasty red candle, right? We basically opened at the higher day, and there was persistent selling. We didn't get we got a little bit of a fade after Chairman Powell was speaking today, but that faded. I mean, we didn't close at lows a day, but we did kind of kick it back there. So I think a stock that's really going to be interesting, and boy, this is Captain Obvious, and I know I'm going to blow everybody's mind by mentioning this name, but I think Tesla's really an interesting one to watch. I think the bearish sentiment has gotten overboard. I know I'm right there, giving it, putting it in a headlock and giving it noogies myself, right, thinking that it's going to go lower as well. But I think that the bearish sentiment is getting really extreme there. I think it's a tax harvesting candidate or a January effect candidate, right? Like, who wants to hold that and have to tell their, what fund managers are holding that and have to tell their limited partners or whatever they are, their investors, but that they own Tesla during this, right? But why didn't you sell it? It's down blah percent, the worst performing FANG stock, et cetera, et cetera, et cetera. So maybe they're just getting it off their books, and then maybe they're going to buy it back after they grab that tax loss on it. So that's one I'm definitely watching. As far as a level for that, I wouldn't be surprised if it cracks 150. Right, but again, maybe it brings in a sharp reversal there. I just think it's real interesting to see right here. But overall, the market, to me, I just don't like the candle structure the last couple of days. So unless we climb up the pole, right, climb up that wall of worry that inflation is still 7% and Powell is still going to keep going until the job's done, I think lower prices are basically in our windshield here. We're looking out. That's what I'm looking at.
Yeah, the price action has been awfully strange. So I think we're in the same boat there. Desi, what's going on? Would love to hear some of your thoughts on FOMC, CPI, and some trade setups.
Hey, how are you guys? Thank you for having me up here. And I just want to go over a setup that I really like right now. I don't usually trade this ticker much, but I'm looking at NVIDIA, and I love where it rejected from. We came up to about that 188 area, 187 area, and we rejected. And now on the shorter time frames, I'm looking at this little flag that we're in. We tapped the lower part of the flag today, and we got a nice bounce. But I'm really watching this for a possible move up back to 180 for a short position, because I do think we'll reject the top of this trend line one more time. We'll come up and reject it. and I'm trying to take this down to about 170, where we were previously rejecting from. It finally broke out and solidified position up there after CPI. But I'm really looking forward to shorting Nvidia's here soon, back down to 170. And if we start breaking that 170 level, I really think this could start melting back to that 162 area. So like I said, I usually don't trade Nvidia, but this is something that's caught my eye recently, and I would love to hear anyone's opinions on it. If you guys also looking at that ticker.
Yeah, Paper Games, you got any thoughts on those?
Man, I swear, every time you have a panel up here, it's like they're looking at my charts each time, dude. But yeah, I think to Dusty's point, what's funny is that if you look across the board, it's almost like every pop at the open, every super strong open, it's like it's been almost a better trade to short after you give it a second, right? Aside from something like a Moderna, and that's if I was going to look at one, that's probably one I would look at still. That today is like day 2 and it's still kind of carrying on, closing above 200. That's a pretty big deal for that. Nvidia, yeah, I think, what do I have? I'm 187, which it kind of like gapped up to. So I guess if you get a little pop again to, yeah, exactly his level 180, that would be a level I'd be looking at it to kind of fail. The only thing is it has its 200-day moving average right in its way that it bounced clean off of today at 175. You could follow a 200-week moving average, which is right at that 187 also, if you wanted to look at some kind of momentum kind of like indicator. And I think, Michael had this, it's the same kind of idea, but almost reverse, right? So from a short, I think I'm not bullish on Tesla, the stock either, but at the same time, I'm not bullish on Meta, the stock, and I bought it recently and it's done well. So I think, Tesla is coming up on its 200-week moving average. It just broke below today. I think that one typically does create a little bit of momentum, but it's so beaten up here. It's like, yeah, I'm in the exact same camp where I think, it could get to that. If it does break 150, sure, maybe like a quick flash to like 145, but that's going to get bought up in my mind pretty quickly. So it'd be a harder one to take profits on if I was short than it would be to go long on a bounce off of something like that. So that's kind of like what I'd be looking at. D-Book was talking Rivian, and I took that short also. That's a bit different. Rivian has not fallen out yet, but it's right at that. It's on the wall, right? Like at 20, it was like 24.50. Below that, it's like it's a straight shot to near 20, if not lower. And it's going to be another one to Michael's point. On the short side, what are the tickers I'm looking at for things that could be falling out? I'm looking at Unity and I'm looking at Rivian as the two like potential short side candidates yet to follow through the end of the year. But yeah, the SPY to me, and again, like your speakers are the panel is like A+, man. That's all I can say. 390 has been the level for a very long time on SPY, and it remains to be that level. I think if we do close below that level, then sure, we're not going up anymore. That's just clearly the structure, right? Below 390, yeah, we head towards that lower fair value gap, 375 most likely. But for now, we just looks like we're kind of just chopping in this still,
Yeah, no, I agree on Rivian totally. Rivian to me, Rivian looks pretty fucked to me. I mean, you look at this weekly chart and you look at if you go back to like July 5th, that weekly low is 24.48.
That's the one.
You go back to May, the second week of May 16th, that low is 24.33. And then you look at that wick down to sub 20. And so that's like, I think that if you're looking
a flusher,
you should probably be looking towards like 20 psych, honestly.
Yeah, no, I agree like completely. I think today it bounced off of that, 24.60, like pretty strong, which is the same level and it bounced off of it, yesterday also. But when it bounced today, it didn't get up. It didn't break Monday's low. So it's still in a clear downtrend. And those are kind of the stocks that I want to be looking at, right? So that's a clear trend. And the other kind of stocks I want to look at is something that just has like just blatant Momo, if that makes sense. It's almost like the stocks that are like, it's so obvious that you wouldn't necessarily think to trade because it's like, oh, it's already done the move, but at the same time it keeps going. And Moderna is another one for sure. So like Moderna, I mean, if it can get over 215, if you pull that chart back, you can get some pretty clean levels right above it to like 227, even 237 if it does squeeze. But this one kind of had a little bit of a change from a fundamental perspective. So the story changes a little bit, and I do like that from just like if you didn't have it, where would you want this in your book, right? And that'd be one where potentially for a good spec at this, I mean, it's not cheap, but above, let me see, what is this? 208, 210, 96. Essentially, if it can hold over that, then it goes back into a higher trading range that goes up to 227.
Yeah, no, I totally
230.
I totally agree, and I agree with what Michael touched on earlier. I look at volume a lot, and I think a lot about accumulation, distribution phases. And I've been waiting for this distribution phase to start to maybe show its hand on really most large caps and mega cap names. We're talking SPY, QQQ, Apple, Microsoft, Nvidia. I think that we're starting to see the first potential signal that we might be entering a little bit of a distribution phase when you look at the increase in volume. And I literally just tweeted this, and I've been tweeting about this for weeks now. I've been waiting, really throughout this entire chop period for any type of real selling pressure increase. And Michael also noted that, Tuesday's candle was in reality still an up candle. Today's candle was barely red, showing a little bit of a lower wick. But if we're able to continue selling, and I think that it's starting to maybe signal that we will, we're going to see some serious volume on the back end of this. When you see serious volume like this on the back end of a consolidation phase, you need to see price moving up. You can't see, sell candles at the end of consolidation like this on volume. That's hinting at our structure starting to break down. Sellers are starting to outweigh buyers. And I think another great volume example is the Rivian weekly chart. If you look at Rivian's weekly candle now, we've got 2 days left in the trading week, and this is already the highest volume we've seen on Rivian in 4 weeks. And so it's going to be for sure the highest volume we've seen in over a month on Rivian. And if that's going to result in a sell, that's ugly. That's very ugly. And so that's why I did take the risky overnight Rivian puts, because you can already see an increase in distribution starting to happen on Rivian. You can start to see it on SPY. You can start to see it on Nvidia. And this is an environment that's so fluid and it changes every day. You have to be able to adapt. You can't just sit, and listen to this space tonight, go head into the market tomorrow, load up puts, close your eyes and check back later. Like, that would be great if it works like that. And I think that it might, but at the end of the day, you still have to, stay active, adapt intraday. These are just kind of my thoughts, and the system that I use is starting to tell me we might be getting close to maybe a leg down. But at the end of the day, like I said, there's still a lot more demand beneath us than there is supply above. And to really get aggressive to the downside, SPY's got to crack under 390. That's the reality for me, at least.
Michael, you got any comments on that?
Yeah, I just want to make sure Paper Gains heard that you just can't buy puts and close your eyes. I just want to make sure he heard that one, because I think that's his basic plan.
You stop that right now.
Yeah. But no, I mean, great thoughts. And yeah, I agree, which, I'm nervous about, because I agree. You should be nervous if I agree with you, just to let you know. But yeah, I agree with that thesis. And yeah, I guess I have to really start looking at this Rivian. The problem is to get down from 24 to, that's a big move, right? That's what, I can't write to you. I got to do the gorilla math in my head. What's that, 20% down?
Yeah, it's probably,
So yeah. So that would probably come with a catalyst of some sort, right? So I don't know if they're going to, but who knows, right? Maybe if there's broad selling and they start pounding the weaklings, then yeah, maybe that could be.
I think if Tesla doesn't bounce, that maybe the only catalyst we need is 10-year yield ripping. Rates rising and Tesla dumping might be. I don't know. It looks tough to me, and I don't want to be. I've had a hard time shorting these oversold names really throughout the past, like this whole quarter, like the past 3 to 4 months. I've tried to short Bitcoin a ton of times, and it worked eventually, but it's sometimes tough to short these oversold names. And on the flip side, it's almost sometimes harder to short the names that are trading at all-time highs. And so, I don't know. It's this is the most mixed market I've ever seen. When you look at charts trading near lows, we've got charts at all-time lows and charts at all-time highs at the exact same time. So definitely a new environment for me. But I mean, I'm probably looking towards SPY puts for the most part sub 390. I hate to get too creative to the downside. I've found that kind of burns me sometimes when I try to go Mike Burry to the downside. Like, you don't have to do that every time. Sometimes you can just buy SPY puts and it'll work, but we'll see.
You want to elaborate that a little bit more, that point about, it's funny to be trading in an environment where there's, all-time highs and all-time lows every day, and those are all in stocks that we're actively trading?
Yeah, no, it's crazy. It's a true mind fuck to really try to get a firm bias, because if you're going to be a bear in this market, on the broader market, on larger caps, maybe SPY and the S&P, sometimes you're going to have to be sitting into a short position, and in the corner of your eye, you see Rivian straight fucking vertical, or you see Roblox just on a rope ripping, and it's very hard to understand that we kind of have two markets going on at the same time right now. We've got McDonald's trading, and then we've got Rivian and Roblox and Coinbase and Tesla and all of those stocks. So I think that's why it's been so difficult, especially for the indexes too, and for really anybody to get a grasp on, am I leaning long or am I leaning short? Because I think we've got two markets going on at the same time, and I think that the growth sector is one where I draw kind of the least conclusions on the broader market. I think that just because Rivian's dumping doesn't mean I need to get bearish on the whole market. I think that I draw larger conclusions from the stuff that truly matters, like our consumer names, the energy sector, healthcare. Are those going to unwind? And I think that the banks too. I think that those sectors are the ones I draw actual conclusions from in terms of like a SPY thesis. And you just have to keep in mind that those growth names are so damn oversold right now that sometimes they're going to rip 5, 6, 7, 8% off of open. And that can be like an isolated event. Sometimes Peloton's going to be on a rope, but SPY puts still might be the trade. And that it's a true mind fuck, but like it's just the reality we have right now. And you have to kind of view each thing as its own, I think.
Paper Gains, any thoughts there?
Oh, dude, I just added D-Book on this. He said distribution, and it's funny. Like,
D-Book's a great follow.
Yeah, if I think we follow each other. If you don't know what distribution is, like in my room, it's like we talk about Wyckoff literally all the time. You could see the setup like on any time frame almost. It's like it's so simple. It's just memorizing like what a schematic looks like, and it's like I just overlaid it on SPY. I was like, huh, kind of fits right there. But yeah, I just, it's a funny situation, man. I Rivian, yeah, I don't think it needs an overall market soft to really get there. But it's one where it's like, it could make the move very quickly. And honestly, if you were just picking it up recently around that same level, it's like once it breaks, look, you're going to close your position. So I don't know that needs a lot of, just if there's no buyers, I mean, and you bought at 24, like you're probably not going to be holding on to this one. And the earnings coming up, it's not looking good. There's a lot of like negative news, I think, on like general EV like market too. So there's a little bit of sentiment stuff going on. But yeah, it's a very clean level.
Yeah. Sure. I'll just kind of touch on that kind of a distribution thing real quick, and then I do have to pop out here. But when I tweeted this analogy, or I guess it's a simile maybe. I tweeted this like a couple of weeks ago. When you're looking at like something like SPY right now, and you see these last 2 days have this pretty substantial, relative increase in volume, and then you look at how we didn't get anywhere on it. Like we just had the two highest volume non-rippy days since November 2nd. So over the past 6 weeks, these are the two highest volume days we've had that didn't produce a result. And if you look at volume in terms of effort versus result, there's been a lot of volume in the last 2 days. There's been a lot of effort, and we've gotten nowhere. And so when I think about that, I think about maybe like a car driving up an icy hill, and you don't have to press the pedal to the floor as you start to get up the hill, but as you get higher and higher up the hill, you keep, pressing the pedal further to the floor, and eventually the pedal's to the floor, the tires are spinning, and the car's still not covering any ground. And that's the kind of the way I look at this right here. We see this very substantial relative increase in volume and no ground covered. So that's to me a red flag that sellers are starting to outweigh buyers in this pattern. And we can kind of, I'm always going to have a bias down in this scenario, and that this could be wrong. I could be wrong because that 400 to 410 zone is super thin. We've seen how quickly it can get traded through, but just my system here is telling me that I should be probably looking down more than up, and that's my bias right now. Like I said, it's important to adapt. It's so important to adapt. We've got so much shit going on right now. Anything can change in a half hour time, so you do have to stay aware. But I guess that's kind of my thoughts on the SPY chart right now. And I do have to bounce though, guys. I hope Paper Gains and Michael can hold it down for us, but maybe Max too. What's going on, Max? I love your videos, man.
What's going on, brother?
Let's go.
Thank you. I appreciate that.
I'm gonna pop out, but you guys hold it down.
For sure.
Good stuff, D-Book. Appreciate that. Yeah, definitely want to get to Max. I see Jaguar came up here too. Max, would love to hear some of your thoughts on the last couple of days, the events that we've been having, as well as the reactions of the market, and then some of your favorite trade setups for tomorrow.
Yes, definitely. And I love to cover them. I'm going to start off with a retail stock that I've actually been currently shorting is Walmart. I went right for the head of the beast. When we talk about the retail sector, Walmart, Target, now you have like Lululemon in there, and then the retail sector seems to be the one that I feel is lagging behind right now when we're talking CPI. If you read the breakdown of the report, right, Walmart has what? Has all of that shipment stuff coming from overseas, has all the food that held 0.5%, while things like energy were -%. Food and consumer items really didn't feel that negative bounce on inflation. So retail for me, if you were to pop open your Walmart chart right now, right? I use previous price data action as every trader should, right? That's the definition of technical analysis. We use the previous data to determine the best move for the outcome for our next move. So if looking at Walmart from November 2020, we have a rejection at the 153 range. Looking at Walmart, August 2021, we have a rejection at the 153. November 4th, rejection at the 153. We finally broke to an all-time high in April of this year, which led to a massive rejection and a poor earnings, right? So it's a no-brainer to me that last week when I saw November 30th and I see the previous price action data, that I would be short on retail. It's what I entered, and I still see so much potential downside for Walmart. And there's a reason I'm telling you guys about Walmart right now. So if you look at the Walmart chart, you'll notice momentum and oscillation really started declining, breaking back into the extremes on December 5th. And we have a 50-yard line RSI drop down, which occurred once on the 9th and then again today. So if you do know momentum oscillators and you understand how to use the multiple techniques with the RSI, you'll understand that breaking that 50-yard line is pretty bearish when the price action matches, right? Which leads us right back down to a gap at 143 and the previous support at 138. So for me, it's a no-brainer that Walmart and retail still has a little bit to come back down before it can really assess. And the reason I'm telling you guys about Walmart is because using those 4 points of annual price data, I can go right to my SPY chart right now, and I can see the annual downtrend starting on January 5th. The annual downtrend that rejected and started there led to a 14% decline. We then tested the annual downtrend again on March 28th, which led to a 21% decline. And then we then tested it again and failed on August 16th, which led to a 20% decline. Now, looking at this week, we failed to break out on lesser CPI data, on Jerome Powell's rate hike, which one thing about Jay Powell is he says what he's going to do and he never beats off the path. That's it. So looking at those events that we were unable to break out of this annual downtrend, to me means that I need to follow the 1 year of previous price data that I've recently gotten, right? So that tells me that we're possibly looking at a 14 to 21% decline. And what really makes it coincidental is a 14% decline right here. It leads us to where? Smack dab at 348, which was previous lows. And if we go all the way to 20% decline from here, where does that lead us to? The 320 psychological level, a lot of analysts were saying could be the recession lows. So if I were to be a betting man, which I am, a stock trader, I'm going to start scaling systematically into shorts on key level rejections, following EMAs, following the annual downtrend as a tight stop loss as it moves downward with yours. It's almost like a trailing stop loss at this point, right? So for me, seeing these massive reports come out and the market staying relatively flat with such wild volume, like today alone, 107 million just on SPY. That is astronomical. It's like nothing we've ever seen just to move 0.64% and then up 0.26 in the aftermarket. So using this data, I'm too bearish right now, essentially, and I am a perma bull. And so I really am not going to trade too much because it's hard for me to do that. Like I can't fight against myself, my instinctual way. I want to call on everything. So right now for me, I'm really looking at that 380 gap fill on SPY in the next 2 weeks. I think that the Santa rally might not really be there this year. Statistically, the Santa rally is 1.1 to like 1.3% into the first week of January, but I just don't see that happening given the recent news that come out and the fact that Jerome Powell was so hawkish during his comments today. Multiple stocks besides retail are following the similar pattern. And so when sister sectors start matching, you're going to see a larger than expected move, especially since we've been in a consolidation box on the market, right? Since kind of like the second week of November. So sorry, I'm ranting on. Last thing I want to cover real quick is Alibaba. So if you do say, oh, you know what, American markets are looking pretty bearish and you're looking for something that may have some potential upside, Alibaba with a beautiful breakout, they're still easing restrictions in China. It's a no-brainer for me that it tested the 21-day EMA on the daily chart. And if it can get past that 95 level, the psychological level for Alibaba has always been 100, right? Those nice round numbers that retail traders like. So I think if Alibaba can continue its downtrend and break out of recent highs of the 95, I think it's going to fly to 100 very rapidly as China already had a minor recession, already had COVID 3 to 4.0, and they're starting to move out. So Alibaba for me, retail shorts, and then just watching the annual downtrend on SPY as you systematically enter shorts in the short term. And that's my rant. Sorry about that.
No, you're good. I definitely appreciate the insights and information there. I saw Paper Gains commenting some stuff. Paper Gains, you agree with him there?
Oh yeah, man. I swear I thought I saw the Walton selling Walmart at like 152 something earlier. Yeah. And that is exactly the level. It's a lower high of this consolidation, couldn't break out. So yeah. I like that for the short side, especially if it kind of breaks the shortest piece of this most recent consolidation. And that trend, it's literally teetering on the edge. And I think it closed on a somewhat doji of that today. So red day tomorrow. And if it breaks that 145, yeah, it's a quick one. I like these kind of stocks actually from a day trading perspective, because there's not typically a ton of IV in them. So if you get a good move, they tend to be pretty like clean throughout the entire day, and you can kind of just ride them as they go. So yeah, I like Walmart to the short side, especially just after that higher low. I mean, it's a little bit that entry at 153 is a little gone, but we have a new trade coming up if this does break that 145, which is exactly what he's talking about. And IV is insanely low.
Insanely low on these retail stocks. They're not large movers, but when they are, like you said, when you do catch the intraday trend on them,
exactly,
you'll see massive percentage gains, like kind of like old school trading, right? For all of us traders that are around like in the middle of the Donald Trump bull market. If SPY used to move $1.50, your contracts were up 300%. Like it was a much different time. And Walmart and a lot of these low IV stocks still trade very similarly to that. You don't need a massive move to see a wonderful ROI on your options contracts.
Very, very true. Intel's another one. Actually, speaking of recently, Pfizer's been a really good one for that too. It's still fairly low IV, and I think I was with you, Wolf, when we entered this. It was like actually one of the very few times where I'd be like comfortable buying some serious time on options. But I mean, Pfizer was still. Let me check the IV on this guy. Yeah, second percentile. Walmart's literally as low as the IV gets. It doesn't get any lower than it is right now on Walmart. But yeah, Pfizer's like steady mover to the upside so far. Yeah, right about that breakout range still, and I got targets to 59. But yeah, it from a day trade, if you buy just like maybe one strike out of the money and you get that nice steady continued move, there are a handful of stocks that should be on your list that you can ride like that, and Walmart's definitely one of them too.
Love it. Real quick, what about? Oh, Des, you want to make a quick comment?
Yeah, I like how Paper Games talked about Pfizer real quick. If you guys pull up the 4-hour and daily chart, we're at this breakout level, like you said. We came and tested this area back, March, April, May, June, and we couldn't break out. And I'm looking to actually take a long here back up to $60 if mRNA continues its upside as well. I just want to quickly point this out before I have to go. This daily on Pfizer looks really good for either side. If the market starts coming down and we start rejecting, shorts could look really good here. Or if mRNA continues its upside in the market, help Pfizer out above this 56 level, we could really see some nice upside up to that 59 and 61 area on Pfizer. And once again, those IV on those contracts are very low, so you don't need a crazy move to catch a nice return on your contracts.
Love it. All right, I got just a heads up to all speakers. Hard stop at 4 minutes from now. I have another space that's going to be starting, so different topics. So please just be conscious. But Jaguar, I saw you joined up, so I wanted to give you maybe about 2 minutes here if there's some thoughts you wanted to share.
Yeah, thanks for having me again. Real quick, so I'll try to keep this very, very short. Talking about Walmart, I'm actually currently short Costco. For much of the same reasons that was just discussed. Purely technically speaking, first of all, what I see in the chart is a very large HNS topping formation. The left shoulder was made at the end of 2021 on the weekly scale at 560. The head was made in April around 600, and then the right shoulder again at 560 sometime around July, August timeframe. And there's a big neckline support around, call it 460. It's a high price stock, so you just have to give yourself a few percentage room there. And I think eventually it's going to break down through that 460. And on my charts on the long-term scale, I think this has room to fall all the way to 380 when that happens. So I'm looking for a substantial move, almost 25-30% move sometime as gradually we progress through to 2023 in Costco. And so that's the one I just wanted to quickly highlight. I don't know how much time I have, but thought that will complement the discussion you were just having regarding Walmart.
Yeah, I think that's some really good stuff there. And then real quick, any top names to watch for you tomorrow?
Yeah, on the bullish side of things, Pinterest is what's really catching my attention recently. This stock is acting far, far better technically as well as fundamentally. On the technical side of things, this is holding up much better compared to the rest of the space. That's Pinterest. It's trying to break out from a long basing formation on the weekly as well as daily, and the volume has been very impressive. We have seen some substantial accumulation in February and March call options, pretty much right at the money in the last week or so. And then today, I was pointing this out to my clients as well that we're seeing in the channel checks that Pinterest is benefiting while all the other social media stocks are losing advertisers. So there has been a lot of loss of advertisers on Twitter platform because, as you all know, Elon Musk has politicized that particular platform, in my opinion. And then Facebook is also, completely into this meta development, which is not going very well, continues to blow money. And I think this is starting to cause a fatigue in the advertiser. So specifically, our channel checks we were looking at today that came out from RBC Capital is pointing out that we're seeing a 19% sequential improvement in the engagement, user engagement in Pinterest. And this is, I think, is starting to play out in the chart. So looking for a substantial breakout here. And I think that in the next coming months, I'm expecting a pretty good quarter in the first week of February. And I think this thing is heading over $30 per share. It's close today at 26.
All right, you nailed the time there, Jaguar. We're right at 6 p.m. EST. Top tier space with some great stock analysts that we've had on here. Desi, appreciate you joining up, and Jaguar, popping in. Didn't even reach out, and it's just nice to see that. And then Michael Saul, Max making it on Paper Gains on super short notice. I reached out to you guys like 10 minutes before this, so appreciate all you guys. This was really awesome.
Yep, had a great time. Thank you for having me.
Thank you so much, guys. It was a pleasure. Would love to do it again. Take care.
Yeah. Yes, thank you very much. We'll join again.
Yeah, great job, everybody, and great job, Wolf, putting this team together.
Thank you.
Appreciate it, guys.
Appreciate you all. All right, we're rolling right into our next space right now. So if you're in the audience, feel free to stick around. We've got some more stuff coming up here. Super exciting space. As always, Wednesday evenings, I do a space with the Wenmint team talking about all things Web3, crypto, all that type of stuff. Now, this one's going to be super interesting because I think one of the things that's going on lately is, now more than ever, there's a number of people that are building in the world of Web3 and blockchain. And yeah, just if you were in the audience, just making a clear distinction here, we had a previous space. I got to change the title right here. Drew, can you change the title?
Yeah, I can change it.
Perfect. While Drew's changing that, I'll just kind of enunciate. So this next space, there's a ton of people, artists, tech people, business people who are building in the Web3 space right now. And arguably, they're building much better products than were around, a year ago, right? There's just more utility. There's better thought out plans. They're not trying to scam people. The problem is things aren't selling the same way that they were a year ago, right? And it's become much more hard to actually sell out, do a mint, things like that. So there's a lot of different pieces to this. So the goal of today's space, we're going to be talking about, Web3 affiliate marketing, but I think really just how to get your mint to go viral is kind of like the idea here, right? And that's kind of what we're digging into. So with that, I will go ahead and introduce the Wenmint team. We've got Drew, we've got Quigley, we've got Zorf up here. We've got some awesome artists. We've got Fitty, Shelby, Abos. My friend Dutch is here. So some cool people coming in. We should have a full panel. I invited some more people coming in too. And basically just kind of start hearing from some people their thoughts on this. But real quick, Wenmint is the number one launch pad on Twitter that you're going to be able to find for launching an actual Web3 project. They deal with everything from development to design, as well as the actual mint, marketing, and so much more. We've done, a year's worth of spaces with them. It's been great. So excited to keep that ball rolling with the hundreds of people that we have in here. So without further ado, Drew, I'll turn it over to you if you kind of want to start us out. And you can feel free to drop it to Quigley or Zorf if you want to have one of them lead us in too.
Yeah, appreciate it, Wolf. Yeah, so for those that don't know me, my name's Drew. I'm one of the co-founders for Wenmint. So pretty much just like Wolf was saying, we kind of provide all the engineering and development for really anything you would ever need to create a project or business, right, or a collection. The smart contract, minting for metadata, image generation, pre-sale, public. You can do fiat, credit, and debit cards, and both pre-sale and public. I still think we're one of the only launch pads or developers that support that with our custom integration with CrossMint. There's a lot of other kind of features or products that we are developing, like the one we're going to talk about tonight, which is our refer to earn, right? So Web3 affiliate marketing, it's an 8 to 10 $billion business, right? And as the Web3 space evolves, a lot more of the successful kind of features, attributes, or marketing skills are going to go ahead and port over, just hopefully more so in a decentralized manner. So essentially what we have created, just as a little quick summary, is a portal that not only Wenmint projects, but really any project can go ahead and implement into their smart contract. And what this does is this allows a normal community member or maybe an influencer or someone that you hired to go ahead and market your project to get a custom link. Now, when they get their custom link, anyone who clicks that and mints through it is able to actually get in real time, on chain, and in a decentralized manner, commission from the mints that they generated. So kind of really providing these tools and assets to businesses, projects, collections to go ahead and turn their whole community into essentially a marketing, and then also provide some other avenues for your community members to also make some commission is a great way to go ahead and just get a huge exposure to others that may not be familiar with your project in just a whole new way and a whole new avenue. And then I'll pass it over to Quig and Zorf if they want to add anything.
I'll jump in here. I'll pass it back to you quick. So yeah, we just tested this. So Pharmacy Phantoms, as you know, which was a drop by Styles P and was pretty much organized and run, and I believe by MetaDutch and Brando, and it was a timed mint that ran for 14 days. The idea was like, don't care how much it sells at 14 days, it's going to be turned off. And so, we actually collaborated pretty tightly with CrossMint to try to solve a couple problems that just some things that we've been dealing with as we've been, like launching these projects. And so one of them was we wanted to support fiat minting in the pre-sale. And, both Paper and CrossMint kind of support that, but there's like, prior to this integration that we did with them, it was kind of real weird to do that. I mean, you had to use like what's called one-time links with Paper, or you had to actually serve up like a whole list through a Discord ticket to CrossMint. It was just like, it just wasn't really seamless. And we already have a bunch of back-end integration for allow listing and everything with our contracts. And so we work together with them where now if you go to CrossMint from the drop down, you can just select WinMint, put your contract in, and boom, you're done. All the magic is taken care of on the back end. And so that's one thing we saw for that Pharmacy Phantoms drop, is that, people could mint with a credit card, whether it was allow list or public sale. And then we got a bunch of people that asked over time, is it possible to run allow list and public at the same time, where everybody gets to mint at the same time instead of pre-sale first and then public? Because, the reality is there's no reason to shut it off. If somebody's on the white list and they qualify for a discount, just let them mint the whole time until you're sold out. And so we rolled that out as well. And then the third thing is we had been thinking a long time about affiliate marketing, and we just wanted, the Pharmacy Phantoms community to be able, to essentially like incentivize the community to help spread the word and help, sort of get people involved in the project. And so we built that, and that turned out to, Iker pulled the data at one point. I don't think he's pulled it after the sale was closed, but when he did pull the data, and bear in mind that this product was finished like one day before launch, so there was really no lead up to it where they were able to promote it or announce or anything. But it looked like about 10% of all mint revenue was generated from referrals. And some of the biggest mints were generated by referrals. I mean, you had like, 1 and 2 ETH mints coming in, through referrals. And so, so basically, we tested that on that one project and decided to build it into an actual product where it's not just something that comes pre-integrated with our Launchpad sort of contracts, but it's also something that anyone out there who's, any Solidity developer can just read our documentation and basically put, 3 lines of code in their contract, and all of a sudden they're integrated with Refer to Earn, which is this, affiliate marketing. And if you go to refertoearn.xyz, you'll see the site there. But I'll pass it over to Quig or anybody else.
Yeah, no, I'll just jump in and say it's just really exciting to see this being built in and integrated. Obviously, we see a lot of people, spending quite a bit on, advertising, marketing, and whatnot. But there is no better form of marketing, in my opinion, than sort of word of mouth, right? And like affiliate marketing has been around a long time, like Drew was saying earlier, and this is just another great way to get us as a Web3 community more engaged and really give us an opportunity to make something back in return for all of our shit posting. So I'm excited about it. It's been awesome watching it being built, and so yeah, I'll let someone else jump in.
Love it. All right, let's pull in Dutch here because you guys just did a mint and you used this actual technology. I'm curious if you could just walk through, how much it changed your mint, how much it, how effective it was, what type of results you saw through it. And then I'll work my way around some of the others on the panel. Again, if anybody ever wants to hop in, feel free to just throw up your hand and we'll go right to you. And then also, I think within this discussion, I both want to hear thoughts around this idea of like affiliate marketing when it comes to minting on a project, but also just ideas around how can people really get these mints to go viral, whether that's via word of mouth or any other ways. Dutch, let's go to you.
Yo, Wolf, what's good, brother?
Chill, man. Excited to how some of the mint went with this affiliate marketing. I know that was a big thing for you guys.
Yeah, let me guess. Every time I say what's good, Wolf, he goes, living the dream.
You know it.
What's up?
All right, I think we got Dutch here, but I might give him a second there. Dutch, did you want to share any thoughts around how your mint went with using the affiliate marketing? Because I saw that you guys had it built right into there.
Yeah, it was a complete success. This was a flawless launch. Now, this was my first launch, but there wasn't an issue, and it was something that when you took all the variables that WebMint did, it it just all sort of, let's just put it this way, the way that I saw it from like the creative thinking, because I'm really not a technical guy. We were able to fire on all cylinders. There wasn't phases really dry out. When you do like you want to give your early people an opportunity, but then some people don't show up, and then you've had public waiting and the space moves so fast. We made a couple of executive decisions the night before launch to make sure that this happened, because the opportunity cost outweighed, not doing it. So we were super satisfied. We minted more than expected, and we're happy that Styles was able to succeed in his Web3 journey, because he's sincere, genuine, and really bringing utility and really bringing some dope artwork and all the IP, and he's doing it the right way. So it would have been a shame if it wasn't done the right way. So your answer is 10 out of 10, bro.
Love it. Glad to hear that it really added a whole nother element to it. Dave,
and I think Zorf hit it on the head, where those mini, I call them like micro influencers, right? Like they might not have 1 million followers, but they have 5,000 followers that follow everything. I mean, they were able to really capitalize on refer to earn. And then, even just like people that I got to talk to in real life, I shared them the link and I was like, yo, you might as well use this if you're going to tell somebody. So it definitely has a unique factor there. And the fact that it's real time, the fact that it's not, it's not complicated. Everything that Wenmint does is very user friendly. So I think all that just mixed with a successful timed launch. When you do a mint party and you have Styles P there, the last thing you need is, there was a typo, there was a mistake, we got to push back. We launched at 3 p.m. on the nose. Everything was perfect. And we closed at 4:20 on the nose, and everything was perfect. So.
Love it, dude. Yeah, it was exciting, and I was glad I was able to be a part of that too. Yeah, Drew?
Yeah, I was just gonna say one thing too that Dutch just mentioned as well is, we're talking about earning commissions and on anything that's driven from like your custom minting link, that is paid in real time, right? So like the moment that someone goes to mint, right, and the mint is successful and it goes through, like that is automatically minted the NFTs in their wallet, but like that commission of however the coin is, whether it's ETH, whatever else, is sent directly to the what's called the marketer's wallet, like in real time and on the blockchain, right? Because I think this also solves a lot of, maybe kind of troublesome or, kind of debating things that a lot of people talk in the space of, influencers or other people not necessarily disclosing whether they got paid or not on a mint, right? And this way, I mean, if they have their own custom minting link, well, they are getting paid and it's on the blockchain and everyone can go see it. It's not necessarily maybe like a back end handshake and it's never disclosed.
Yeah, Zorf?
Yeah, I was just going to kind of add on a little bit. So like in Web 2 marketing, anybody who's done Web 2 marketing, commissions are usually paid out on on like a pixel that fires on some kind of confirmation page. And that worked really well, maybe 5, 6, whatever years ago, before these browsers got smarter and like Brave and blocking JavaScript, scripts and things like that. And so now sometimes in Web 2 affiliate marketing, one of the biggest, I was talking to Ronnie at NFA, and he's done a ton of affiliate marketing. And one of the biggest problems a lot of affiliate marketers in Web 2 are facing right now is that in some of these browsers, the pixel just doesn't fire. And so, so the affiliate, even though they drove the sale, doesn't get the commission. And then of course, obviously they're not paid in real time. I mean, they may get paid once a month or whatever. And so this is obviously not based on a pixel firing. It's just based on an additional parameter being passed into the mint function, which is the wallet address. And if there's no wallet address passed into the mint function, then we know there's not a refer, and then it's not paid out. And if there is one, we just check to make sure it's not the same person that's minting. And no matter what, the transaction doesn't fail. But if it is a different wallet address than the minting address, then that commission is paid out. And on the contract, you can set a base referral fee. So you might say, I'm going to pay 10% of all mints. And you don't have to pre-register any affiliates. I mean, basically, if a wallet address is passed in and it's not the same person minting, it pays out to that wallet address. It doesn't matter. But you can also identify what are called super affiliates, like people that you might think like might be a micro influencer or somebody who's going to drive a lot of referrals. And you can actually register like a bonus commission on top of that base commission. And so whenever they refer, they get paid more. And so that's one of the features that's built into this. And I'll pass it around. I was going to tell you a little bit more about these partnerships we're building with content publishers that will bring even more eyes to these mints. So it's not just about your community sharing a link. It's also eventually going to be a bunch of Web3 content sites out there that we're actually serving drops against, and we're helping them monetize their websites while they're also driving mint traffic. And that's kind of the bigger vision we're pushing with this.
Yeah, let's definitely bring some of the panel in. David, would love to come to you first, kind of get some thoughts on, I think it's always been important to get your, community involved with the mint, right? Have them pushing it out. And in the past, it's been, hey, more people owning, more volume, things like that. But now kind of incentivizing people also monetarily during the mint to push things out. Have you seen things around this?
I think it's a great idea. I think you'll have less of people questioning stuff, and I like the whole affiliate marketing thing. It's not a bad thing. If somebody goes out there and they sign up, there's an agreement, it's out there on a public ledger for everybody to go ahead and see. Like that should be enough transparency for somebody to say, you know what? Okay, this project, they're literally putting it out there. They're not being secretive about anything. You know what? I am potentially going to be interested. And you know what? If I like the art and I like the utility, I'll jump in. Just because everything was transparent from the get-go. So I like the whole affiliate marketing thing, because you have a bunch of people that'll open up rooms and they'll say, oh my God, this NFT project is killer, man. You got to get into it. And there's 15 people, that you don't know that are getting paid until they're tracked down by one of our investigators here within our spaces, whether it's CoffeeZilla or if it's Zach XBT. Until 3 months after the fact, you find out that there was 15 people who had their hands in a cookie jar. So affiliate marketing, I guess this is I guess this would be NFT 3.0, to where now we are figuring out ways to be more transparent with our entire community. I like it. It's a huge thing. And whoever, I don't know who came first with it, but congratulations, because this is exactly what we needed.
Yeah, super cool to see this getting implemented. Go, I see your hand up.
Yeah, hey, I like the way different ventures on different blockchains are approaching this. I'm multi-chain, and but the ones that the marketing agencies that I'm most involved in for this piece would be on Solana. And so some examples where I'm partaking in this would be Trust Labs and Bell Studios, and they're really efficient with it, and a lot of team members are involved, and it's a multi-tiered approach. And what I've seen so far with using Trust Labs as a launch pad and agency, and then also Bell Studios to buttress that as another marketing agency that works kind of like a handshake with that, is working really well on Solana. So I love to see when Mint is doing on ETH, and then kind of using that as a reflective piece on another blockchain. I think it's very effective, extremely effective. And when you use launch pads like this that are trusted, the values behind the people who are working on this team, that just means that 99% of the time, the projects that are using these tools are going to provide long-term value to the people who come in and hold. It's not just a one-off kind of, well, will it or won't it succeed? That the vetting process is there, and you feel more secure when you go into Mint. And that's just a backed venture there. So I appreciate it.
Yeah, I appreciate you kind of talking about how this has been in effect and in order. I guess as an artist yourself, would you see maybe projects that you're advising or things like that? Would you talk to them about a process like this and see them implementing it? And then any other ways that you've seen people looking to get these mints go viral?
Absolutely. In the past, the projects that I've advised have gone directly to Magic Eden. Was it like Magic Eden, which is always, nice because people tend to trust like the main market shareholder too. But a lot of people still have issues with big marketplaces and like the ways that they move and how they compete with the other aggregators in the market. So I definitely love individual launch pads like this that are making it easier for projects to just do what they want without having to kowtow to like the main pieces in the market. So I definitely would and will continue to aim for launch pads like WenMint, Trust Labs, and Bell Studios as a market agency.
Sweet. Shelby, you want to bounce off that?
Yeah, so first of all, I love this conversation. Thank you so much for having me. I've been listening and learning a lot about WenMint. I hung out with NFT Drew quickly in Miami, and it's really cool to be here on Spaces with them, and also, of course, Wolf. So, getting back to the subject of virality. So, first of all, I think affiliate marketing is amazing because it adds so much transparency to what before has just been in the shadows happening, and then people find out, and it's upsetting. When you feel like you've been fooled by influencers who maybe are being paid, behind the curtain. I love that this is putting it out there for everyone to see and creating a system where people can feel like they really know what's going on with a project. And I think when it comes to virality, having content creators like micro influencers is everything because just having a big following and a big platform does not guarantee that anything is going to actually be successful. I think we've seen some really big influencers with huge followings promote projects that absolutely flop because they're not, first of all, they're not like, their heart isn't in it and they don't have the support of the people. I think, especially in the bear market, a lot of influencers who may have had a lot of success before in the bull now have seen their audiences dwindle, as people leave the space. And I think it's really important for, projects to look at the influencers who are getting engagement now and building communities now. And have them create content around the project, like memes, jokes, and like from their hearts, actually, not just, reposting a flyer or something. And, I think there's just a lot of content to offer right now, like a lot of people in the space who are building right now. And I hope that projects can look at that and not be fooled by just a huge following count.
Yeah, it definitely looks like it can bring a lot more transparency to the space, which I think is what most of us are focused in on here. Fitty, would love to get some of your thoughts here as somebody who's launched numerous projects, had projects sell out, and perhaps you're kind of see what I'm seeing, where it's getting more difficult, but also the communities are perhaps getting more tight knit because the people that are still in it, I think, clearly care, and this could be kind of that home run hit that you can serve up to them. Just curious on your thoughts all around on this, as well as any other ways that you've seen successful marketing and projects lately. If you're available, Fitty. And if not, I will divert that same question right back to Quigley because I saw your hand up before.
You're gonna have to repeat that question because I had a question I was gonna ask. So I was
you ask yours then. Go for it.
Okay, it was actually a question for any founder up here, and it's a real simple one because kind of what Shelby was talking about. I totally agree, right? I mean, the transparency aspect, kind of everyone knowing sort of who is really behind a project and all that is, I mean, that's super valuable, right? But I also think for founders, this is a huge deal because how many of these founders, and anyone can chime in or raise a hand or throw up 100, have paid out a ton of money to a marketer or an influencer or someone to help, promote their project and gotten nothing, nothing back, like very little back in return. I mean, so this is a huge way for you as a founder to look at this and say, okay, now I can see who's actually out here, grinding and making this happen for our mint. So you get to learn who's in your community and who's actually behind your project and making shit happen. So I think that's a huge point. I just want to see how many of you guys have had that happen to you. I'm sure most of you, right? Because that happens a lot.
Yeah, let's definitely drop that to any founders that want to pop in. Maybe Shelby, would you want to share any thoughts on that?
So I mean, I'm a founder of my one of one project, which is my art, and I haven't really experimented with affiliate marketing. I will in the future. I do want to expand and do more, rather than just my one of one art pieces. But I am interested to hear from founders who actually run bigger projects and their thoughts on this. I think that was a really good contribution by Quigley.
Yeah, it's definitely go.
So working with projects on the inside on core teams, like I am not a sole founder except for my own art, like Shelby. But I have seen from the inside, when there's a lot of content made and when it's just kind of shuffled off to the side and it's half-hearted, and when they don't show up to spaces, and when they don't put the tweets out that you ask, and when, you know, and so I totally resonate with that. You ask for things or you set expectations and the expectations aren't met. Um, it's a hustle, and sometimes you think I'm careful to advise my projects, like, get with the right branded person who is actually gonna work hard because they just believe in working hard, not just because they have a big following and they rest on that following. There's a I have a good instinct for people like this, and you can't just capitalize on somebody's brand. They have to be churning out content, because they believe in the content itself, and I've seen it time and again.
Yeah, facts. Drew?
Yeah, I think that was also a really good point that was made too, because the fact that all this is on chain, right? I mean, this really kind of imagine if there's a marketer that comes to you and they say, hey, this is my reach, this is how many people I can go ahead and do that, but it all may be botted, right? Like there's nothing to say that it's not botted. So like this is also a really nice way, like on chain, to say, okay, for example, you had 300K followers. Maybe it's a gaming project, you're a gaming influencer or a gaming, advisor, whatever it may be. You made this post about our project, and regardless of other attributes of, other things that could come into play, either great, you had 500 referrals come through, or you had two, right? So it's also a nice way of, kind of some statistics or some other on-chain data for marketers to also kind of gather and use themselves to say, hey, look, I've gone ahead and used refer to earn in multiple projects. This is, what my actual ROI has produced. This is my price, and this is also why I can justify it with this on-chain data.
Great points. David, well, actually, real quick, Fiddy, I want to pull you back into it. We were kind of talking with some of the founders that have, sold out large projects. Kind of curious how you've seen the landscape changing over the last several months within that, and if you see kind of the need for these affiliate marketing and other ways to make Mints go viral.
Yeah, no, thanks for having me up today. How's everybody doing? I think it's been pretty fascinating. I think Mint has been doing some really next level stuff. And one of the things that I've noticed is people are getting smarter. They're not minting everything. They're having less FOMO. They're just kind of taking their time to breathe a little bit, and they're watching. And yeah, if you're gonna make have some kind of an incentive to mint, it's been working. I know personally, I gave that link to a few people, and I got some money in there. It wasn't a ton of money, but it was something, and I would have referred it anyway. So I think it's a great, useful tool, and I think definitely down the road, you're going to see a lot more things like this. But I think that what the Wenman team's been doing has been awesome, because now you're allowing communities to engage and make a little extra couple dollars. And I think, from what we've all been through in the space in the last year or so, and I know you guys like to say bear market. I'm still going to say buyer's market because I'm still buying stuff. I think it's a great thing. I think there's always positive to reward people for helping, working, and I think it's really great for community growth, because I know we all talk about community, but how much better can you do than actually have a community participate in a referral program? So now if your community engages, not only will they win by getting a cool mint, but they're also going to get a percentage for referring it to their friends. So I think it's absolutely brilliant.
Are there any other ways that you've seen people working to make their mints go viral and to really ramp things up in this environment?
People are doing different things right now. And I'll tell you what's really, I think, have been working is really not somebody coming out and talking about their PFP collection, talking about, their utilities and what they're going to do, is actually delivering something. And I've seen a lot of people starting to do that. And as a matter of fact, when Styles P came out and Dutch was there, I mean, he straight up came out there, said, I'm going to do this, I'm going to do this. And he's going to do it because, he's been around for years and years and years. So I think that what I've noticed is people are actually stepping up and doing things. They're not just saying, oh, well, we're going to sell out this collection. And when we do, we're going to open up this, we're going to do that. People are actually starting to realize, hey, we need to deliver. And I think the ones that have been delivering, or at least showing signs of it, have been doing really well right now.
Very interesting. Yeah, I think it's exciting to kind of see people going in those directions and making more moves. David, kind of same question to you. Outside of affiliate marketing, crypto's been kind of up and down. There's obviously a lot of stuff in the last month or so that's been going haywire within the system. Have you still seen kind of a consistent move of building, launching, things like that? And then what's the style and the way that you're seeing people going about, setting up marketing campaigns and other pieces that maybe could gel well with an affiliate program to get those launches out there to get sales?
I think for the most part, like the builders are still here and they're quietly building while, we have obviously the current mess going on, which is the FTX and SBF scandal. But you have the innovators continuing to build. And I really think in terms of marketing, you have people that are marketing during a bearish market. And I think this would be a good thing for crypto protocols to go ahead and take on instead of paying people 0.5 ETH or 3 ETH to go ahead and show their projects. I think the affiliated marketing would be the way to go for crypto protocols. No doubt about it.
Yeah, it's definitely a better way for people to go, and instead of that shilling, and it's just kind of like a transparent system as well with the blockchain aspect of it, where people can kind of see, they can get real-time payouts. I think several other pieces within that. So
Well,
definitely
it's the same thing like when you had those affiliate marketing links from Binance. When Binance first came out, I'm just going to say Binance because if I go way back, nobody will remember. But Binance had, when they came out, they gave you a link like, hey, refer your friends, and you get, I don't know, it was 40% at certain levels, 20%, and you would see it in real time for yourself. Was it seen to the general public? Yes, some of it was. There was a leaderboard, but I don't think it's anything worse than like what Binance had back then, or still has with an affiliate link. I mean, yeah, it might, to some people it might come off like cheesy, but I don't think it's cheesy at all. I think it's the right way to go within this industry that's currently still in its current infancy.
great points. All right, Moon Boy, I see you requested to come up. Any thoughts you'd like to share on the topic?
Hey, thanks for having me up, Wolf. Honestly, I just seen the title Web3 Affiliate Marketing, and I come from direct to consumer and e-commerce my whole life. So just thought I'd tune in and kind of ask you guys, what do you have? Is it something as interesting as like, hey, I'm going to be able to, use affiliate links to track, my friends that are buying products via Web3 and crypto, or what kind of affiliate marketing are we talking about?
Yeah, Drew?
Yeah, so essentially, what we've developed is, for example, for any founder, and the cool thing that we did here too, right, is, we didn't just gatekeep this to WinMint. It's powered by WinMint, but literally any founder can implement this into any of their contracts, right? Like this isn't just specific to WinMint. This is powered by WinMint, and it is white label too, right? So it's completely branded, completely likable to, the project itself. But essentially what we've developed is, for me to essentially get a custom minting link, right? So for example, you can go and mint Dutch's project, or you used to be able to at, mint.pharmacyphantom.io, right? And that was just like, think of it as the vanity minting link, right? And so what I can do is I can log into the dApp. I go ahead and get a custom minting link, which is tied to my wallet. I go ahead and share that with my community, my friends, Twitter, whatever it may be, and anyone who mints directly through my link, I will get a commission for anyone that mints through that based on whatever percentage the founder decides to do in real time as soon as the mint is successful directly into my wallet on the chain and decentralized. No one has to go ahead and approve after I hit a certain amount. It's in real time for every single mint that comes through my link.
Got it. So the prerequisites here would be obviously if I'm a founder and I want to launch NFT, I would have to partner up with you guys and approve the affiliates that are going to be sending my links out. And then obviously now I have a way to measure pretty much influencer marketing, aka other creators.
Yeah, I can jump in on some of this. So no, the way, and we talked about this a little bit more. I know you came in a little bit late, but basically the way it works is, anyone. So whenever, essentially whenever, if you're a founder and you're launching a project, then essentially, I don't know if you're a Solidity dev but whatever the case, we've set it up where you can basically add, it really truly amounts to about 3 lines of code to your contract that kind of ties you into this whole referral back end. And then you also have an affiliate sort of portal that any of your community members can log into, and you don't have to pre-approve anyone. They just go there, they connect their wallet, they log in, and there's a link there. And the link is, it really is the exact same link as whatever your mint form is. So like if it was mint.pharmacyphantoms.io, then the link is going to be mint.pharmacyphantoms.io. All it does is append a little parameter on the end, which is ref equals, and it has your wallet address on there. So because obviously we know in this space, like all kinds of weird stuff happens where somebody will add an extra character and put up a fake mint page. And so we wanted to keep it, we didn't want to do anything weird with the URL. We wanted to, it's the exact same URL as your mint form. It's just that your mint form just has the wallet address on the end of it. And so you can share that out. It's got like little share buttons for WhatsApp and Facebook and Twitter and all this different stuff. Or you can just grab it and send it to somebody. And then if they click that and land on the mint form, our mint form is, or if you're doing this on your own, then your mint form. And of course, if you go to refer to earn.xyz, it has code examples there and shows you how to do grab it out of the URL and put it on your mint form. And it'll just basically grab that wallet address out of the URL. And then whenever you build, your developer builds the mint function in the contract, you just accept one extra parameter, which is refer. And then that's it. And so if a wallet address comes into that mint function, then that refer gets paid out. And if it doesn't, then they don't get paid out. And that's really it. And then there's a back end for the project founder where the founder can log in. So the affiliates log in and they see only their referrals, like how much money have I made from my referrals. The project founder has a project, like a founder dashboard they can log into, and they can see all referrals there. And so we also have a publisher dashboard, which we haven't talked about that yet. But the bigger vision here, as we talked about, one question Wolf has asked repeatedly in this space is, how can projects go viral? And, and I think part of that is definitely, it's kind of like somebody said a second ago. Incentivize your community and get your community involved in helping spread the word. I think that's important. But I also think it's important to if you go back to like the early days of Google in 2000 and realize like there was a huge amount of web content out there, like big newspaper websites, blog sites, all kinds of sites out there. And with huge amounts of traffic on those sites every day. But those people doing all that work to create these big content sites were having difficulty monetizing it. And so obviously Google created AdWords and then AdSense, where you can put a snippet of JavaScript code on that wallstreetjournal.com or whatever, and they crawl the site and figure out what ads to serve against it based on relevance. And now all of a sudden, boom, you have big, huge, content sites that are able to monetize their traffic by simply displaying some ads on the right side of the page. The problem, obviously, is Google keeps most of that money and gives very little to the advertiser. Well, so we're building out a similar distribution sort of network like that, where we're partnering up with a bunch of Web3 content publishers, and that includes everything from big blog and article sites like Cointelegraph, IC Tools, Rarity Tools, all these tools, as well as Discords that have a lot of Web3 people in there, and they have bots in there like, say, AlphaBot or BodoBot or whatever, or they can just install our bot. And these drops get pushed into these Discords or they get served against all this content. And it becomes a way where these Discord community owners can monetize the community. The content publishers can monetize the content. And now all of a sudden, instead of only your community sharing it and spreading it, you're showing up all over the web. So people don't even have to, they may have never even heard of you. And all of a sudden they're reading an article on Cointelegraph and they look over on the right-hand side and there's some drops over there and they're like, what is this? And they click off. And if they mint, Cointelegraph gets paid. And so that's really the bigger vision, is to build out a big content publisher network, just like if you look at Commission Junction or something like that, these are like huge affiliate marketing platforms. And that's the direction we're going in with this.
Zorfix, thank you so much for explaining that. That makes absolute sense. And yeah, I would love to maybe even have you on my podcast. Not that I'm shilling anything here, I don't want to, but I think you guys are building something great. So we'll definitely love to connect after.
I'll follow you.
Love it. Dutch, you want to come in here, and then we'll go to Stamina after?
Yeah, no, I just, as the project that used it, I just want to say, I got a lot of DMs, about how do you feel about the website and clicking links and the culture. And Zorf hit it on the head. It is the same link. So you had to just get that little learning curve where once people were clicking the referral links, I was getting DMs like worked perfectly. But you have to get through that little bit of the barrier. And now that we've done it, you know what I mean? Good to go. It worked perfect.
Very nice. Stamina, you got a question or comment you want to throw in here?
Hello. How are you, friends? Well, I'm learning about this world of the NFTs. I'm doing it, trying to go ahead with a musician career and writer, because I also write, make music, and other stuff. And just yesterday or a few days, I discovered I can put my music in OpenSea. Yes, just a few days ago. So I start to do it, but I really have no idea about how this works. So I'm super open for two things. One, for business with someone else who really knows how to make money with this, and open to advices too. So I just,
I'm gonna pop in here for a second because I love the topic on music NFTs, I will say, and we've done a number of spaces around them. I think they're super interesting. I'm not sure that it's necessarily for this space, but what I will say is that I think that the overarching theme of this space kind of is going to matter a lot for the music world, and I'm actually kind of glad that you brought that up as well, because there's a ton of, that's one of the biggest areas, right? That's a huge transition, is artists moving into the space, taking their music, turning their music into NFTs, right? That's become a huge thing. And then getting it out there has become, I think, a big part of that that's been really, really tough, right? And so I think for artists, one of the biggest things with music is its shareability, right? Like that is how a ton of songs get out there, is not just from millions of people coming and listening to them on a specific platform, but actually from people sharing those songs with their friends, saying, hey, the song's great, right? And things like that. So I think that, especially when it comes to NFT minting, I could see kind of like an interesting middle ground there. Moonboy, you got a comment on that?
But yeah, it's funny that you guys are talking about music NFTs, because literally today I wrote a short thread about sound, and obviously they just finished their first year of business, or they've been around for quite a year now, and just looking at their last month or so, specifically for music NFTs, they had a 250% increase on a month to month in terms of how many music songs were minted. And then obviously their revenue was increased, I think almost 100%. They did 271,000 in terms of royalty and volume on people buying and selling music NFTs, and then obviously about 2,000 new active users in terms of collectors and artists on the platform. So yeah, I just wanted to throw that out there. Some really dope stats, and good to see developments in terms of what's going on behind the music NFT scene. And it is very, very early and underslept on. I think just the biggest factor is just having an actual artist that comes in and uses sound actually blow up, right? And seeing them in the Web 2 world do their thing, and not just doing it in the Web 3 world. I think that's kind of like the biggest stepping stone in order for us to really see like music NFTs have the narrative that they deserve.
Drew, have you had any conversations with artists like that, or Zorf? You want to comment on that?
Yeah. Well, we've worked with, we launched all of Sammy's projects, Joe Ryan, Joey Capitana, just a lot of Web3 musicians, and especially what Sound is doing, right? Is they're curating, they're finding a niche, right, specifically for that, and they're helping them gain the attention, or they're getting the eyes specifically for music. And yeah, that's a niche, and yeah, it's brand new, and introducing tools or features that Sound is doing, what we're doing, really helps kind of capitalize on, okay, Web 2. How do we get everyone from Web 2 and that are used to, the subscription platforms and all this other kind of stuff, to really try to understand the, non-fungible part and the ownership part of not only a music NFT, but also the artwork and everything else. And I think the stats that you just shared is absolutely awesome. And I think that shows that, yes, it's growing. More and more artists are realizing that, hey, it's their music. They don't need to lose 40, 50% of their shares for what they produce just because of a label or other things that, really just has the eyes. And, they're just taking literally the majority of all the profit just because, they may have market share, other things. I mean, it really just kind of puts the control in hands into the artist to let them do what they want to do with their music, right? I mean, it's kind of even funny that we're even saying that, but that's the sad truth and reality. So I think it's, more tools, more developments, and a lot of this stuff, I mean, it's tools, right? Like you need multiple tools to go ahead and be successful in 2023, because just like Fiddy and everyone else said, I mean, you know, consumers are getting smarter, the space is evolving, and it's not just about, simply PFPs, or I'm going to go ahead and raise 3 million so I can go ahead and get enough money to go ahead and actually start developing what I told you guys that I'm going to go ahead and have, versus I'm going to go ahead and have everything ready the moment that you guys mint, so you can go ahead and actually be a part of what I'm actually doing now, and then we're going to grow together upon it.
And then Drew, if people in the audience, I'm sure we have, some different NFT projects, some different people that are working on projects in there. If they're like, hey, this kind of sounds like a good idea, I'd love to have this, Web3 affiliate marketing built into mine. What's the easiest way for them to make that happen?
Yeah, so you can actually go check out everything with a lot more detail at Refer to Earn XYZ. That's the website for it. We're still kind of just slowly rolling it out at the moment. But if you have any questions or want to learn more, feel free to shoot myself, Quigley, Zorf a DM. More than happy to go ahead and answer that. E-Money as well on the team. He's in the crowd there. And we'll be happy to go ahead and get you set up, answer any questions. The nice part about this is literally, I mean, it's literally so simple. Like Zorf said, from a developer founder perspective, it's 3 lines of code, and then the dashboard and everything else is spun up from the dApp that we have, where it's literally click, click, done. I mean, we try to make this just as easy as possible for this to be a tool that provides a lot of impact for you to go ahead and add to your arsenal to be as successful as possible.
I'll tell you what I liked about it, and I hate to jump in because I know Zorfus had his hand up. That's why I want to talk right before he gets a chance to speak. It's so simple. Like, sometimes you talk to like a dev and they make it complicated. This is simple. Like, it takes seconds. There's like no work involved, and that's what makes it so cool. Like, you don't even have to be techie. Like, I'm not that techie. You know what I mean? I'm starting to become a little more techie because I'm in the space, but it's very simple. And when you basically put simplicity with a good utility, that makes it super successful.
Yeah, Zorf.
Yeah, I was just going to say, if you do go to Refer to Earn, and you could either go to Refer to, like TO, or just refer the number 2 earn.xyz. There is a button there that says Join Beta, and you can just basically punch in your information. We'll actually it'll be fully live, and we'll remove the beta and just let anybody sign up here in the next week or two. But for now, if you just want to punch your information in, we can get you set up pretty easily. I was just going to say that.
Love it. All right, I want to ask some of the other artists that we have on here. Let me go to Shelby and Gogo here. Just some of your thoughts on, kind of this year in review and what you think next year holds for us within the Web3 space. You can go more general here. I'm just curious. Like, a lot got built this year. It was very different from the year beforehand. What your vision is going into next year. Gogo, would love to hear some thoughts.
Yeah, so I'm really excited for art, entertainment, and gaming NFTs. Doesn't really matter what the market looks like when it comes to building for those, because people want to invest in holding those, not flipping those. And I work really closely with a friend of mine who is building for long-term interoperability and composability, and that's multi-chain, right? So the future is multi-chain. And I think the more we talk about making that paramount, as opposed to, my chain is better than your chain, ETH versus Solana versus Tezos versus, Cardano. I think all chains have their benefits, and each chain has, weaknesses that other chains can come in and complement. And I think as long as we're talking about gaming in a non-play to earn sense, but a hold to earn. And that, I think that kind of excitement is what a bunch of my friends in the gaming industry for Web3 are building for. So both on Solana and on Ethereum, I have a feeling I'm going to take a deep dive into Tezos here in this last part of Q3 and into Q4 because I've made some friends recently who are really into it. And then for fine art, this is just, it's really taking fire. You know, we originally got into blockchain for the real world problems it can solve, including fine artists reaching their audiences with max interaction, just middlemen out of the way, being able to get to your community and get your art, whether it's visual art, illustrations, animations, or literary art, being able to put that directly in the hands of so many more people than you thought you could ever reach. And it's having its renaissance again here in Web3. People, more people than you ever thought possible are coming in and discovering how art is just so reachable here in this next iteration of the internet, which is NFTs and Web3. And I saw so much excitement in real life about that, just my recent trip to Art Basel. And so it doesn't matter what condition the macro economy is in, I think, and it doesn't matter what condition our altcoins are in. People want to invest in both gaming, entertainment, and art, no matter what, because they want to hold those for the long term. So that's where the past year I've had my focus is the artistic media and the entertainment media, and where I will continue to see that thrive is creating platforms for artists and entertainers, and I do a lot of that with my friend Shelby. So without further ado, I will toss the mic over to Shelby.
Oh, Gogo, I love everything that you said. You're so spot on with this. You're really tapped into the artist ecosystem. And yeah, I really agree with everything you said. And beyond that, again, with the future being multi-chain, I'm really excited for that because whether it's, an NFT project that is based around a service or it's, art and fine art, it still makes it more about the quality and the function of the product than what chain it's on, and that's what's going to give a project success. And so I'm really excited to see. I plan to move to other chains. Right now I'm only on Ethereum with my art, but I'm really excited to see what's happening and what artists are doing on multiple chains, whether it's like Tezos, Cardano, a lot of really great artists in different places. I'm excited for it to come together and for everybody to kind of branch out into these different chains. And I'm also just, yeah, really excited for the art space. And one artists have been popping off recently. And I cannot wait to see what the future has to hold with that. And like Gogo said, just getting art in the hands of more people, getting in front of more people. And I do believe that the artists and the founders, not just artists, but founders too, who are building during the bear are going to see crazy success when the bull market hits. And at that point, it's going to be hard for people who haven't been here during this bear market to come in and compete with people who have been here building. So I'm excited to see that pop off and to see everybody really be rewarded for the work they've been putting in now.
Really well put there, Shelby and Gogo. Hey, Iker, I see you requesting. I'm having trouble bringing you up. Try reloading Twitter and re-requesting, and I'll get you up here. Let's go over to Zorfix.
Yeah, I was going to mention Iker's going to come up. So Iker, he did a little bit of digging, and while we've been on this space, he went and found out how much revenue was generated through referrals for the Pharmacy Phantoms Mint, and so he was going to come up and talk about that. And otherwise, I just wanted to say I think a couple of these observations that Shelby and Gogo were making about the future of all this being cross-chain, I think are spot on. And so everything that you hear us talk about, including this affiliate marketing platform, we've spent kind of the last 2 years mostly building on Ethereum because obviously that's just been kind of the focus of all this big NFT explosion. But I mean, a lot of chains, not all of them, but a lot of chains have a fully functional EVM and Ethereum virtual machine. And so by building up these Solidity patterns on Ethereum, it's very easy for us to expand cross chain. And so if you look at Refer to Earn, you'll see 5 chains down there that 3 of them that are already up and or 2 of them that are up and functional, obviously, which is Ethereum and Polygon, which is just a layer 2. But Hedera, Solana, and Cardano are the next ones on our hit list, and we do plan on expanding pretty much everything we're building cross chain.
Iker, we got you up here now?
Well, that depends. Does the Twitter gods let me talk now, or did we run?
Yes.
Yay! Well, I went on a little bit of a number sleuthing session, and I dug through the Pharmacy Phantoms contract and found that for all referrals, there was a total of 4.67 Ethereum paid out to the people that were referring, which for Pharmacy Phantoms, the way that they had set their payout referral, that is 47-ish ETH worth of mints driven from people utilizing their refer to earn links, which is pretty darn cool.
Yeah, especially for the first time, and like Zorb said earlier, there was no like marketing that went into that, right? There was no announcements. It was basically like, here it is, the day before.
For context, I don't know what the total raise was, but it was somewhere in the neighborhood of something like $250,000 to $300,000 on that mint, and so that means, whatever you have to do the quick math there, but say 47 ETH or whatever. You're looking at about 60K or something, somewhere in that neighborhood. So that's a pretty big percentage of the overall ETH that was raised coming through referral mints.
Yeah, it's super interesting. Obviously, it's somewhat of a trade-off for the founders who have to kind of fill this in. But I think for most of them, they would much rather go down this path of marketing than some of the other paths that we've talked about, which just dropping like 5 ETH to like 5 individuals, something like that. This, I think, is also a lot more results based, right? Which a lot of founders like to look at. So they'll want to be able to say, hey, this person actually got 10 people to go ahead and sign up. We're going to pay them X. We're going to pay them in real time as they get these things done. So there's a lot of good pieces to that. We got a few more minutes on this topic. Next topic, just as a heads up, I have some Web3 people. If some of my Web3 people want to stick around, we're going to be talking about security in the world of crypto and Web3. So a pretty fun topic to discuss that I think a lot of them will enjoy. So looking forward to that. Drew, and then Clear Crypto, I see you're up here. So feel free, Clear Crypto, to let the rest of your team know they should go ahead and request now.
Yeah, I do see ECC06 in the audience. Go ahead and request. And I'm looking for the others.
All right. Drew, any topics that we haven't hit on yet during this space do you think are important to cover? And then just any other pieces in general that you wanted to highlight to people before we make that transition in 2 minutes?
Yeah, I think this is, again, just a really nice tool to add to the arsenal. And this is just the beginning, right? Like as soon as we get this kind of fundamental kind of product out and it's rolling, like there's going to be many improvements and additions that we'll have that will just add just immense value. And for what it provides, I just don't see why a founder wouldn't want to use something like this to go ahead and have a tool available not only to themselves, not only to the marketers, but to their community, to go ahead and just have the community and other aspects be rewarded for, like Quigley saying, being a shiller. But again, yeah, definitely appreciate it, Wolf. And if anyone is ever looking for any developer or engineers, definitely feel free to shoot me a DM. We can pretty much cover everything. And then again, Refer to Earn, .xyz is the website. You don't have to launch with us. Any founder, anyone can literally use this. So whether you would like to use us for development or engineering services or not, Refer to Earn is a product that we're not gatekeeping. We are putting this out to the Web3 space to really just help the ecosystem grow.
Love it. Shelby, any final thoughts from yourself? I know you messaged me there.
Yeah, this has been such a great space. I'm really excited to see what the future has in store for When Mint. I may want to be in contact with you guys because I am thinking about expanding my own ecosystem with my arts. And yeah, I love that we're building this community here. I think everybody on the stage has so much to contribute and some of my favorite people in the space. I also just want to thank the audience for being here and thank Wolf for hosting.
Thank you so much. Go. Anything else from yourself? It was your first space hopping on with me. We got to meet in person down in Miami, so pretty cool to make this happen.
Yeah, really excited to have been here. This is a topic that I think needs to be discussed more because there are so many dividends to be paid for affiliate marketing. I think it needs to be something that is more present in the space. It's just evergreen content that you can be putting out as an individual, as a group, as an entire agency, taking advantage of this, just word of mouth and all across Twitter, across multiple platforms, something that I think is super smart. Really appreciated being part of this conversation and really appreciate everyone who came to listen. Thank you guys from When Mint and Wolf. It was so fun meeting you at Art Basel. You guys, great space, and I hope to see you guys soon.
Love it. Awesome. So we're right at 7 p.m. here. Clear Crypto. I'm ready to get rolling in 1 second. I will just give final word to Zorfix. Anything else you want to share? And then we're going to roll into our security in crypto and Web3 space, which, any speakers that are still free for that next one, happy to have you on.
I'm just glad to be back, man. I know you had fun in Miami, and I hear you went to Paris afterwards. So, and it's good to see you and old Drew hanging out over there. And it's good to be back, man. We appreciate you.
Did make my way to Paris, went to the Ledger event. I was one of the first people to get to hold a Ledger Stacks, which is pretty cool innovation that they're making. Had a nice little interview with their chief experience officer. Got to meet Tony Fadell as well, who designed the Ledger Stacks, but also designed the iPod and some other cool pieces. So pretty cool time, and then I was very touristy for the rest of my time there. We're at 7:01 p.m. though. Carmen, you ready to go?
I am. I'm still wrangling a couple of cats, but I do have one of our speakers on board already on the panel. Ed, is that you? Can you unmute? Make sure we can hear you.
This is Ed Cardone.
Hi, Ed. Okay, for those of you in the audience, if you want to take a look at the Board of Advisors, I have some of the guests coming onto the panel today to have a great discussion. You can find out more about Ed if you go to clearcryptos.com. And I have a quick summary here for you guys. And Wolf, thank you so much. I mean, I've been listening to your last hour of spaces. You always just have a home for great discussion. That last topic was near and dear to my heart, part of my career. So it's fantastic to hear the speakers.
Love it. Yeah, I think that was a top tier conversation. I'm excited for this one. I think that, that last one really hit on something unique to, the marketing side of things and going viral and, security. And that appeals to people making projects. But I think security is even more widespread, right? And really to anybody that has any interest in this space, security is the number one thing that we live for, right? It's that constant balance between risk and reward. And there's not necessarily an inverse trade-off between those two things in this space. You can have reward, but also be super secure, right? And minimize your risk. So would love to continue to dive into there, and I'll let you lead us off.
Yeah, absolutely. I mean, since I have Lieutenant General Edward Cardone on the call with me, if you go to Clear Cryptos' website, you go to the company tab, you go to Board of Advisors, you're going to see a bio of who this is. I brought him here to the conversation today based on his experience, and we can ask him questions. Ed, I would love to give you an opportunity to just introduce yourself and why you're a part of the Clear Cryptos Board of Advisors team and what you see in terms of security future on the blockchain.
Sure. Still learning how to use this. I appreciate the help, Chris, in getting set up today on this. So I retired after 36 years in the Army. For this group, probably of greatest note is I scaled Army Cyber Command and stood up, which has now been outed, top secret task force, offensive cyber task force against ISIS in 2016. I've been out about 4 years and I still keep my hand in the cyber world. I've always been interested in blockchain technology. I'm not an expert at it. I do operate under a philosophy that everything can be hacked, and it's very hard to hack this. It's possible, but it's very hard, and would take I think, a tremendous group. But I'm looking forward to this conversation here going forward, and just excited to be part of Clear Cryptos. I've not done much with cryptocurrency yet. I would say I'm a laggard follower here, but I'm very interested in learning more. So great to be here today and good to meet everybody. Thank you.
Thank you so much, Ed. You know, one of the questions when I saw you on the board of advisors that I have for you is, given your career and the path that you've had to really contribute to the cybersecurity space with the invention of the internet, you obviously can maybe see some mirroring of the growing pains of a new technology in the hands of people. What it comes down to when you have that mentality of anything can be hacked is we're kind of like navigating through the lack of regulation that's in this space to help protect people from the bad players. So are there some instances that we're like spinning our wheels and reinventing things that are already in place that should be in place here?
Yeah, that's a great. I have a couple different frameworks by which I look at stuff like this. So, first, I tend to use a people, processes, technology, policy standpoint. What's interesting to me is we often just immediately go to the technology. It's probably the people that are, in the end, probably the most important. And the processes, eventually, processes will emerge, and they have to emerge to bring order out of chaos. But maybe if I go to the policy side, I'll speak a little bit to some of the challenges that I ran into. And some of these problems have just been resolved in the last 5 years. So I'm an advocate for talking more about offensive cyber, what it can do, try to make it not be so scary to the American public. And so one of the problems we were having in 2016 is how ISIS was recruiting young Americans to join the forces and fight in Iraq and in Syria. The challenge is they're using our U.S. platforms to do it. Facebook, Twitter, others. And those platforms were basically, I call it hiding behind, well, we're free and open, we can't really do anything. And so I brought to the government, what do you think about hacking Facebook? You can imagine what happened, right? But what it brought into view is, a lot of these things can be used for good and not so good. And so what are the rules of the road? The fact that there were no rules in the road, the rules of the road come late. And I think a lot of this was because those companies did not engage early enough to try to put the guardrails up in a way that was good for everybody. So it was the Wild West. And then generally when you have the Wild West, there'll be a correction when something bad happens. You're seeing that now. And that's not good for everybody. And so it's going to be overcorrection, recorrection, et cetera. And so what could probably have been done in probably a 1 to 2 year period, given the pace of the way that the government makes rules, statutory regulations, et cetera. And just for the group, I view the government only has a couple of ways to do it: tax, torts, insurance, and regulation. So using those levers, how do they regulate an industry to have open market principles, but have enough security that it is safe for Americans? Maybe I'll stop there. That should generate some comments.
I think I could keep asking you questions all day, because like hearing that feedback leads me to ask questions about whether or not, we are having a conversation that's on a level playing field. Off some of the, like even just the Senate Banking Committee, testimonies that were given today, some of the understanding of what this technology does, what are the features and benefits, what are the advantages, what are some of the risks to it. We are understanding that some people are just not fully educated, and the questions are being asked to people that maybe are not suited to provide the right answer. And we may have been in situations like this. How do we overcome this to have a better conversation?
That's a fantastic question, and I've dealt with this. We have to spend time with the Congress and the regulators educating them. Do not assume they're going to get educated on their own. And for the most part, they're not experts in this area. And so I spent a lot of time as the cyber commander, educating not just the Army, but I bring congressional staffers, the State Department, who has a big role in this, other people in, and showed them exactly what we're doing so they have an understanding. So when they're sitting in the room, when you're not there and these discussions are going on, it's an educated discussion as opposed to what they last read, etc. And given the current crisis, it's a great time to do that because you could see how the Banking Committee, SEC, there'll be several committees of Congress that feel they have a role here in how this should be regulated. It's a perfect time to get in there and get educated, and not just the members themselves, but the staff, which is really who writes the legislation.
Wolf, I can keep asking questions. I
Yeah,
want to
no,
pick a guy's brain.
these are
Okay.
these are great. I want to give a chance to bring Kyle as well into the conversation, because kind of get some of your thoughts, dealing really with the security token side of this as well. Just kind of your thoughts on the ever-changing structure of crypto and Web3, and then also if you have any thoughts on just what we've been talking about so far here with Edward.
Totally. Yeah. Ed, thank you so much for being here. I mean, you're such a wealth of knowledge and expertise that I don't think many people get to really hear from in traditional contexts. And certainly thanks again, Wolf, for having me here. And Clear Crypto is excited to learn more about your platform throughout the event here. My name is Kyle Solomon. I've been in the blockchain industry for about a decade. Specifically, I started by working in the artificial intelligence theory side of it, mostly with consensus mechanisms, which is kind of how artificially intelligent systems make decisions, especially when you have a couple of them working together or not together, and they need to decide which one is right in a disagreement situation. And so I think that a lot of what you're saying here makes a ton of sense. I work specifically with security tokens these days, which are real world assets that are tied to blockchain tokens. So unlike security with regards to how you have mentioned it already today in terms of cybersecurity, and there certainly are security tokens with regards to cybersecurity. It's a whole different definition. I deal mostly with registered assets. So these are real estate, these are equities, debt products that have their assigned ISINs, QSIPs, and the different registration that comes with being a real world asset. But then we're leveraging the blockchain to automate that compliance piece of, okay, well, since we know who you are, we can transfer that information between parties so much more effectively. I'm happy to dive into that. I don't want to take the conversation over though. I want to keep this line of questioning going, Ed, because I'm really fascinated in kind of the what you're discussing. And so with respect to some of the different legislation that comes through, what is the overall goal, do you think, of these different regulators? Because as to your point, their job is not necessarily to be educated in this industry. We definitely need to do what we can to educate them. Is it more likely that good regulation comes out of just electing the proper people that are pushing the right agendas? Or is education actually an effective maneuver? And in your career, have you seen that be effective? Because it does seem like it lags so far behind. Even when you're mentioning Section 230 and everything that goes on with social media, they still haven't figured it out. And I watched all the different testimonies that went on with Zuckerberg and all of those people from last year or 2 years ago, and I thought many of the lines of questioning were kind of embarrassing with regards to their actual fundamental understanding here. Is it a realistic task to actually teach some of these regulators what's actually going on here, or is it better off to be doing kind of the route of building new stable structures? I'm kind of going in circles, but I'd love to hear your ideas and thoughts around, what are effective means of communicating some of these things to regulators to help drive adoption.
Yeah, so that's great, and the way you laid that out, I thought is quite good, and I think you have to do all of it, right? So, what's interesting, going back to the 230 briefings, that was rather embarrassing on how little our many members of Congress actually understand how the internet and social media works. That was rather stunning. But I can bet that their staffs know how it works. They just were unable to bring that forward. And it's those staffs that actually write what goes in there. But there's a big tension, right, here, which is how much regulation is enough. And generally, you only see the regulation really emerge when something bad happens. When you think about it, yes, it's tweaking on the margins, et cetera. But when you see big chunks of legislation come down, it's generally when something, I'll just talk about the banking industry. 2008, it was pretty free. After 2008, there was a lot of regulation that we're still living with today. And yes, it's being tinkered with and being adjusted, and some of it's being undone, but it's 2022. So it's been around a while. So now, I'm a big believer in showing people how things work so that when these discussions go on, it's not always just the last person who was able to get their ear that presents their position. But I come out of an operational background. I had a brigade combat team in Iraq and commanded 2nd Infantry Division. So I tend to look at things through an operational lens. So I tend to show people how this stuff is used to kind of give them not a thing, this is exactly how it works. This is how it's used. This is how everyday people would do it, how it would use it, how it would make things better, safer, etc. Here's the downfalls. Here's where there's probably got to be some guardrails. Laying out discussions like that in a narrative story format, that'll stick. Now, I like what you said in the last part. Using technology to build stable structures and make sure that they understand why that has the stability we need for this type of what would I call it? Environment. That's not even the right word, but I think you get where I'm going. I think is also important. So it doesn't have to be the Wild West. You see kind of some of this now with the recent one. It's like coming down to pretty much as this fraud. So that's a lot different than it was a week ago, but I still expect to see some pretty heavy reactions on this given the number of people that have been affected by this.
Right. I think I've got one more follow-up before I certainly can pass it off to the rest, and I'll have plenty of questions if we start to run out. But could you talk a little bit more about what excites you about the blockchain industry specifically? I think that I've been in this industry for quite a long time, and I've seen plenty of bull and bear markets. And alongside bull and bear markets, you see plenty of solutions in search of problems, right? And so I think a lot of the 2017 bubble in the crypto industry, for example, was people trying to build what really boiled down to economic incentive mechanisms for the same old platform. So it was like, oh, well, blogging is cool. We're going to pay you to blog. And what it turned out is that people that don't want to monetize their hobbies, right? And so that was something that just never really took off. And so most of those cryptos failed. We're certainly seeing a similar type of scenario with NFTs, right? In terms of most people don't buy art, right? So the average person isn't buying a lot of art. And so, of course, it stands to reason that probably NFTs weren't necessarily going to last from that perspective as well. So for me, I see so much value in the compliance of transacting in capital markets. And so managing those audits of where assets are moving and how cash is flowing between actors, not only inside of a jurisdiction, but more specifically interjurisdictionally, right? Once you bring in a global investor audience, it becomes much, much more difficult to manage that in a manual basis. That's why Goldman Sachs and Morgan Stanley hire tens of thousands of people to essentially just copy information from spreadsheet to spreadsheet, right? And so that's what I see as a huge benefit of blockchain is managing some of that stuff. Do you agree, or do you see a different use case that really proves the benefit of this technology above just the novelty of the technology?
Well, I think I first got interested in it more from the supply side, from a supply chain view. Like, one is, what do we have? Where did it come from? And where is it? Right. And what intrigued me by it, it's an open ledger. So no longer, if you think about the way a lot of, let's say, X company creates, 10,000 parts, they go into some warehouse somewhere, where they are then. They start moving around across all kinds of suppliers. You have but you don't really know who has them, and you don't know where they are. And you don't know how many are really left available. And so with a blockchain for certain types of technology that would be required to be, tracked. I'll use an example. Every weapon that the Army buys has a serial number, right? It can be tracked on blockchain. You could know exactly where this is, but we spend incredible amounts of time trying to keep track of, to your point, they get counted all the time, et cetera, et cetera. But if you had an open ledger, you knew where all this was, be fantastic. And who has it? That's as important. So to me, what always struck me about the blockchain is the ledger and its transparency, right? And so those things that need that kind of visibility, I think would be. I think this is a ripe use case for it. Not everything has to be in blockchain, but I could clearly see things that have to be tracked, especially that are critical in nature. And then, of course, I won't. The financial side's even more incredible, right?
How do you defend that transparency? Because it feels like if the government, for example, built a blockchain network, I guess it would be transparent within the permissioned network, right? So there's always going to be this level of permission that you need to account for, right? And does that end up just kind of being the same thing over again, where we have 20 or 30 or 50,000 different permissioned networks that all don't really communicate well with each other, and then we kind of end up in the same boat 20 or 25 years from now?
You bring up a great point, right? Which is, but I'm pushing pretty hard on zero trust networks, and I think zero trust network meets blockchain, and I can view a blockchain could be one segment, and then you just control the authentication and the encryption, right?
That's really cool. That's really, really cool.
That's sort of the way I would set it up. The other thing, of course, you'd have to have with what I just talked about is a pretty good network. And I think that we're there now. I certainly wouldn't put this, what I call it, the edge, right? But for a lot of this big stuff, it'll work fine. But because it's just the number of not transactions, the number of interfaces that have to happen at real time, near real time, means you have to have a pretty good network. Still there?
Yep. Yeah, we've
I'm
got
here.
you.
I'm here. That was awesome. That was really, really cool. I think that, from my perspective, like the interoperability, as you mentioned, that's kind of the term that I always tend to gravitate towards, is one of the most important pieces here to preventing what we've both just recognized is potentially one of the biggest risk factors of this technology just becoming another example of enterprise tech that doesn't really get adopted, right? Standardizing how we do this process and how we do this system, whether or not you have access to a certain set of information, provided that, to your point earlier, as long as the process is the same for all of these different data sets, then we could very easily integrate with the right ones that matter. And I think that that's where we're seeing legacy tech failing today, is that you have these mass conglomerations of companies, right, that are just buying different tech and buying different software and buying different competitors. You certainly see it in the military industrial complex as well, where you've got all of these different operating systems and all these different databases and underlying technologies that we then kind of like zombie together to make something that is kind of duct taped together to allow these systems to communicate. And that is obviously, when we're talking about the high speed, not only action in a real military scenario, but then also to your point of the high frequency transactional systems that go on between different counterparties, that's quite literally represents time is money. And that between waste and how much exorbitant spending goes into things that just aren't actually even benefiting the larger economy, and being able to manage that stuff, I think it all makes total sense. And then you finally layer on the encryption we haven't even talked about, right? Of encrypting this data and working through. I mean, your point about zero knowledge systems. I mean, ZK proofs and rollups are are something that have been really played around with quite a bit in the blockchain ecosystem. And it's a fascinating way to encrypt information while preventing any one individual party to have too much leverage over that entire transactional system, because no one inside of that economic system actually knows really what's going on. You know that you're playing your part and you're trusting that everyone else is. And that's really potentially the only way that this thing actually works. Because that blind faith in the actual software, the code is law in some regards from that instance. So again, thanks so much for sharing your insight. I've got plenty more questions, but it's not my Twitter space. I'm just an excited listener. So thanks again for everybody, and certainly, again, thanks for your time, Ed.
You're welcome.
I think everyone would want to pick Ed's brain for sure. You know, coming from a background of cybersecurity, I think that a lot of us in this space who are even small, like a small amount of time in this space, you want to see accountability for the bad actors. A lot of us don't have the luxury of watching somebody like SBF get arrested. There's so many CEOs and project owners that have surfaced throughout the journeys of so many of us that should have been held accountable. And yet, from your experience, like, who do you think is the lowest hanging fruit for us to create allies with in the security space that would be advantageous for us to develop that relationship with, to hold these bad actors accountable, to help clean up some of the bad optics that this space has?
Okay, that is a great question. So let me explain, first off, one of the reasons why I'll use cybersecurity first, then we'll bring it over to this. So when U.S. Cyber Command was created, everybody thought it was created to protect the United States. But actually, U.S. Cyber Command was created to protect the Department of Defense networks. That's all it has the authority to do by the Congress of the United States. They gave CISA, out of the Homeland Security, they have the responsibility to protect government networks. Everybody's going, well, what about the commercial space? Well, you're on your own. However, if it's criminal, you can call the FBI. That's how, when I took over Army Cyber in 2013, that was the lay of the land. And so you saw these, they call them ISACs, Information Sharing and Analysis Centers, get created fast, where people could share information that sits within CISA and Homeland Security agencies. And obviously the best working one, no surprise, finance, because that's where all the money is and that's where people try to go. So that is the way it was initially created. Now, a lot's been done since then, but in general, there's this reticence inside the United States to have the government, U.S. government, on U.S. citizens in any way, shape, or form. And I've dealt with this for years through 9/11 onward. So it's not an issue. I support that, and we have a lot of processes and procedures to deal with that. Now, when you think about this, so it starts with who has the responsibility. So inside the United States, for this type of work, it's going to be either the FBI or one of the other government agencies that is used to dealing with U.S. companies and U.S. citizens. That's where it will sit. It will not sit anywhere else, I don't think, because there's no body of law and by extension regulations that will allow it to be done anyway. And so this creates a bit of a problem. This is why I go back to the Congress. So one of the problems in cyber is that we're using 19th and 20th century law in a 21st century world. That's why we have a lot of problems there. And it's slowly resolving itself, but much slower than it should. So I hope that provides a little context here as you think about, okay, so what are the agencies? Clearly the SEC is going to get involved with money and companies. There's no question there. The FBI gets involved in the criminal side, and you may not know the FBI is growing like mad in the cyber world. So that is positive. What I'm unsure of is how much they're doing in blockchain or getting the expertise in place to even start working with it. But perhaps after recent events, they've recognized they're going to have to form at least a division and get started on this if they're going to actually pursue the bad actors in this space. I'll stop there for questions.
Did you have any follow up on that, Carmen?
No, I mean this is kind of off the backs of all that information download. In this space, we kind of tend to have a mentality of all faucets open, and yet this is a good example of why we have advisors like this on the Clear Cryptos board. It's because questions like this of what we should do, what we shouldn't do, how do we prepare for scalability and be able to adapt with the volatility of our space. These are key people that we keep close to our business so that when we make moves, when we have to pivot from the roadmap and our utility to continue to bring value to the audience that we're looking at, which is the no coiners and the tenured traders in this space, we need good advocates like this to give us the insight on how these systems operate. Where's our low-hanging fruit? Who do we need to collaborate with, and how do we scale up and make an impact that's on a positive level versus a negative one? So thank you for letting me ask those questions, and I'd love to hear from some of the speakers we brought on stage.
Yeah, I can throw one in here at yourself, Ed. And what I'm curious is there's a lot of beginners entering the space still, even at this point, right? A lot of people have taken their licks, but there's always new people entering the space or curious about entering. I'm curious on some of the ways you think people can best go about educating themselves on the ways to stay safe and secure in this space. Just kind of initial thoughts on that.
Yeah, it's this is the first time I'm using this Twitter capability, but for me, you can almost find anything on YouTube. And what I would, I'm a big believer that educate yourself, and so I think we've talked about this some with Clear Cryptos is before people get involved, perhaps a short tutorial on what you're getting in and the security around it, right? So they actually understand what they're doing as opposed to following the hype, which there was a lot of hype as we're finding out. So that's one. And then I think you could also add that a little bit more by saying this industry's not regulated yet. So you really have to understand what you're doing before you invest, right? At a level that you're comfortable. And so I maybe start there. I mean, I think there's a lot of responsibility on this, but and I haven't kind of perused through this in a level that I probably should have yet to see what's out there. Because the other problem is, how do you know what you're looking at's any good, right? And generally, people look at like how many people have looked at it, which is not a good measure. But I put some thought on that piece as well. But I'm a huge believer in education, but it's got to be clever, right? That's one of the problems with today's society is our attention spans aren't that long. So it can't be some dry briefing. It's got to be something that really drives home, I think, both parts, right? It's not just the security, but it's also the power of this, right? I mean, sometimes the security sides, it introduces all this risk, and then people, I'll use an example. When I used to do the offensive cyber stuff, all these generals used to say, that's it, I'm not using my phone anymore, I'm getting rid of it. I'm like, stop. I just wanted to show you it was possible. That's all. There's plenty of safeguards built in. But the point is, is this education. I'm a big believer in sort of an operational frame, so people really grasp it as sticks into what they're doing. I don't think I answered that very well, but that's the best I have here at the moment, and I'm definitely going to think about that a little bit more.
Yeah, I appreciate that. Another question here: what attracted you and got you on board with Clear Cryptos in that area? You know, coming from kind of your background, what felt like a good fit there?
For me, it was it's more working around the framework for crypto than actual one specific token, right? This is like, oh, we're building a trusted model. I think I forget who said this. It's like we're going to be the Bloomberg of crypto. I understand what that means, right? And it's like, okay, I can wrap my head around what that is. Now, there's trades, and I got all that, but you know, this is a framework where people can assess trades. You can assess, is this really good? Is it not good? And then it's on us to make it work, right? But the frame of that kind of a frame, I completely grasp, and I got pretty excited about that because that is missing in this space, right? If you go back to recent events, you know, if there had been any due diligence, right? Just the biggest problem, obviously, between the two companies, that would have been seen, should have been seen, right? And it would have been pretty high risk. And there's people that knew. Now you can clearly read about it right now. So that's what got me initially excited in this. And then of course I'm on my own learning curve here as well, working with this.
Great stuff. Yeah, Ashley.
Hey, so I was kind of doing some digging on your website and really interested, in what you're doing. But I was curious about a couple things. And I'm sorry if you've already said that already, but are you able to access your applications without purchasing the token? And also, like, what kind of benefits does your token have outside of like the rewards that you could earn when using it within the app?
So by holding the token, you also have reduced gas fees, and the analytics platform is currently available for free for everyone to try out. We currently have a V2 underway right now. So this is our first version of the utility. And we're giving everyone complete access to it so that we can gain feedback and grow from there.
Sorry, thank you so much. And I'm sorry, can I just one more follow-up question? I was curious if you have plans, like I know like some chains are capable of like housing like NFTs. Are you guys gonna go in that direction at all? Or are you just staying within the crypto direction?
NFTs are definitely on the roadmap, right? So there's gonna be a lot of robust utility. It's really gonna be tied to the overall mission: know, trust, and act. The first level of utility is us really bringing to fruition this platform in which, being aggregated from 100 different sources with TradingView native into our systems, we want to create tools that people can trust that are unmanipulated. So we understand that in this space, you can have the pay for play systems, and it affects the decisions of people who are investing. It's unfair, right? So we want to create a level playing field for people to take in the analytics with little to no latency that they can trust in order to take action. As we continue to roll out additional utilities, it will foster, better understanding of what impact we want to make in the space overall. You can take a look at the advisors that we have around us to help us for that growth. In addition to that, when we take a look at the tools and the education platform that we're trying to build, our key audience is the no corner, but the utility is robust enough for day traders and people who want to, that are tenured in this space. So it is quite a wide variety. It's a first version of us making a good impression in this space as we continue to grow. Hopefully that answers your question, Ashley.
Yeah, it does. Thank you.
Great stuff there, Carmen. Appreciate that. We've got another 20 minutes here. If anybody does have questions from the audience, I will extend as well. We've got some great minds up on stage right now. So feel free to drop me a DM or comment anything that you would like. If you want to come up, anything along those lines. Kyle, I want to pull you back into it, see if because I know you mentioned you had a couple other questions. I love the style of question that you have. The back and forth with you and Ed is top tier. So would love to drop back to you, see if there's anything else on your mind here.
Yeah, for sure. I think that I'd love to hear from Ed. Like, obviously, you don't speak for any U.S. department, but I'd love to hear kind of from your perspective, where are they looking for the future with respect to cybersecurity with this technology? Is it in mostly the same things that are interesting you, or did you find that there was a bit of a difference in where they were prioritizing resources? Is it mostly enforcement, as you mentioned, or are there opportunities with supply chain and distribution that are focuses? Is it encryption, cybersecurity? What does the Department of Defense and by proxy the rest of our kind of U.S. economic structure, how are they prioritizing technology, if at all?
Well, they're definitely prioritizing technology, and this is one of the technologies that they are prioritizing. I would say it's more the way the department divides it out. They have science and technology, and then that leads to research and development, and then it leads to prototyping, and that leads to product. Unfortunately, they use that for everything, including software, which is why it takes so long for the stuff to get out there. I've tried to change this through a lot of years, not been very successful. So first, it's of interest because of what can be done, and so start thinking about all the different applications where you need assurance that you need a ledger that's transparent to the people that need to know, right? So there's a lot of this inside the intelligence space. There's a lot of this inside the cybersecurity space. I think there's a lot of this inside the supply chain space. Clearly in the finance space, but the way the department gets money, they're given money which they spend. So it's a different kind of approach. I could see how, just thinking out loud though, I could see how the Congress would love this, so they would know exactly how we spent that money, and if we spent it the way that they intended us to do. I could see that being great.
Not if we also track donations.
So anything that, it's really imagination. Now, the problem is right now is I don't think the expertise inside the department is very nascent on this. Unless you're in the technology spaces, then people will know about it. But, we're still migrating off of, Excel spreadsheets in many cases, right? So that has been, and you can just look at the artificial intelligence journey that the department's been on, and it has been, well, I'll just say what everybody knows. It's far too slow for what we're supposed to be doing. So it doesn't mean we don't have some great places where it is working, but it's not working at the scope and scale that people were expecting at this time, given, we stood up organizations, we've spent hundreds of millions of dollars on this, we meaning the Department of Defense, and we don't have a lot to show for it yet. So
right.
It gives you a few ideas, but to me, that's why I kind of always start with the operational. You show people operation, they'll make the links, right? Because the department has, at least the leaders have a very operational mindset.
Right.
Good stuff.
Yeah,
Kyle?
on that last note, I see there's a hand, but just to follow up with that, I want to hear kind of your thoughts on. I was on a panel with Diogo Monica of Anchorage, the CEO of Anchorage Digital. They're the first federally chartered bank to handle and custody digital assets, and he was talking about regulators and the lack of aligned incentives for regulators with respect to new technology. And basically his point was that as a tech company, you can take on this massive innovation risk because the reward justifies any potential shortcomings there. But for regulators, for them to be forward thinking, they don't actually necessarily benefit from any value created by new developments and new changes in those systems, while they stand to lose a ton if they get it wrong and it goes very poorly, right? Whether that's reputationally or potentially worse consequences. And when we're talking about the Department of Defense and the greater military industrial complex, obviously the risk would be, compromised national security, which is obviously a much bigger deal than, re-election. So do you see some issues with regards to those types of realities of just kind of the human incentive mechanisms behind what we do and how we drive innovation? Like, is there not enough incentive necessarily for these departments to change course because they kind of maybe have a little bit of a mindset of if it ain't broke, don't fix it? Or do you feel that it's maybe just a lack of expertise?
That's a great question. It has several different answers. So I'll have to start in a couple different ways. So first, by its very nature, the Department of Defense, is in the risk management business. And so it wouldn't surprise you that in many areas, there's a low tolerance for high risk ventures, right? In fact, I would argue that me as a brigade and division commander, I'm also in the risk business, and I'm, assessing in that how, what level of risk are we willing to accept, and that's all, paid off in mission, lives and equipment. So it can be quite daunting. Now, for regulators, you're 100% right. It's no one gets. I'm going to overstate this because I don't want you to color all federal employees with this, but it's a lot easier to say no because rarely will any downfall come from that. Whereas if you say yes and it goes bad, there will be repercussions from that. So it makes for a risk adverse force, unless, and this is where the key is, you pick the right use case where it's so screwed up already that bringing this in
inaction, not doing it makes them look just as bad. You have to skew the accountability,
I was going,
right?
Yeah, not only that, but could make them look good, right? Incentivized, right? And so this is where I go to this one I started with people, processes, technology, policy. The people side is so important, right? And so for me inside the department, the way I would approach this is find the right use case where something it's just bad now, and you offer them a lifeline on the way out. And I normally describe it when I've done 16 change efforts inside the Department of Defense. Some have been easy and some have been very hard, but people always say, well, how do you start? I said, start with making sure you have a burning platform. Otherwise, nothing's going to happen, right?
Interesting. So burning platform as in kind of to your point, that's something that finds something that's already broken to start fixing?
Yep, start fixing. And then
have like have a guaranteed benefit that's already essentially baked in, that it becomes a no-brainer.
It's a no-brainer, right? And everybody see it. And then I have a little saying, failures and orphans, success has 1,000 fathers and mothers. It's and when that happens, this is on the leader side, I say have a little humility, act like you've been in the end zone before, right? So who cares if all these people say they were doing it and they had nothing to do with it? We just want them we're changing a mindset. So don't get all wrapped over who gets the credit. So it's this is you can see the way I kind of operated.
Makes a ton of sense. Thanks for your answers there. I see Gandalf has a hand raised. If you want to jump in, feel free.
Hey, thanks for that. Been a minute since I've been back in Spaces, so thanks for having me up here. So this topic is relatively close to my heart. I've got somebody who is very close to me, involved in cybersecurity in the defense. And I was curious to know, in relation to, I guess you could say, risk management, if you can explain, and I don't know how much of this you can explain, or share how much of the research and development goes into offensive strategies as opposed to defensive strategies. I know it's called the defense, but I was curious as far as offensive strategies international.
Yeah, great great question. And so I always have to kind of start with this premise, and then this will take me a minute, so please bear with me. So you'll hear this all the time. It'll be like, the defense has to be right, 24 hours a day, 7 days a week, 365 days a year. The offense only has to get lucky once. They can try 1,000 times. There's no penalty for hammering on the door. You hear that all the time. Except when you start actually doing offensive cyber operations, you realize it's a hell of a lot harder than people think. And it goes like this. The way I describe it is, you have to maneuver through networks trying to remain hidden, which means you can't have very many errors, all the way up, navigate your way through all this technology, of which there's normally at least 5 or 6 involved, to whatever endpoint you're trying to go to either get initial access, expand your privileges, etc. When you think about that pathway and then start thinking about, so for example, today, Apple just put in a ton of new updates. Everything that was built on the previous Apple devices, assuming there weren't some, it's all trash. It has to be redone. And so when you think about it, to make it hard on an attacker, I think the most powerful thing is to have a dynamic network. So the network is never stable, because offensive practitioners, you need stability. Now, you can create persistent access, etc., but you're always having to create pathways. And if those pathways are always having to be adapted, it is taking a lot of energy and manpower. So that's one. The problem with the defense is, for years, this is my words, is we depend on firewalls and endpoint protection, woefully inadequate in today's world. I describe it as a little bit like an egg. Get through the shell, you're good, right? Instead of, and you can see my operational mindset here coming, build a defense in depth, have sensors and warnings out there, use deception, honeypots, etc., and you're going to see them coming. And then I have the 3 strategies I use for the defense, or I tell companies, is resilience, make yourself hard. If you're dealing with ransomware, they actually have a financial incentive. If you're too hard, they're going to move on to a weaker target. 2, if it's really that important, have redundancy. The example I always use is a tank. A tank has a ton of technology on it, but if all that technology was smashed, we can still fire that tank manually. It's redundant. And then the last part is, with cloud technology, you can do this. What happens if your network gets completely compromised? Well, just reconstitute it, which you can do today in cloud like crazy, if you have the right setup. So I think the defensive side is getting better. It's getting harder. The offensive side keeps moving. To your friend in cybersecurity, here's what I'd say. Here's my the way I approach it. When you can no longer hack the IT technology, now it's time to hack the person or hack the facility. And this is where the importance of a CISO, and hacking the person is social engineering, et cetera, which many of you are well aware of how that can be done. And then engineering, because at the end of the day, the whole thing is still held together by humans, and humans make mistakes. The key is can you put controls in place that minimize the mistakes or allow you to see that something's not right, which generally, once you know something's not right, that's the beginning of the end for the offensive player. I'll stop there. I could talk a lot on this, as you can tell.
Thanks for that. If I can have a follow-up question, Wolf?
Of course.
Just on that last point you made about human error, does that mean that you're a believer in removing the human's footprint, I guess you could say, or fingerprint on some of these technologies in order to remove that weakness?
I could see in some ways, I'm just thinking philosophically here, on some ways that would be helpful, but not always. I mean, the premise I start with is knowing what I know now, is I really believe this, that everything can be hacked. It's just a question of how much time and resources you're going to put against it. And with my commercial clients, I normally tell them if a nation state decides they're going to take on a company, and there are certain nation states that are targeting certain areas of the U.S. Technology, it's almost impossible for them to defend themselves without government help, because a nation state doesn't care how much money, and they can put people and resources against it. I back to the example I would use with the general officers. I would sit them down at an offensive operation before we start. I'd say, tell them how long it took you to get your initial access, and that young soldier would say, it took us 3 years. Now, we're not hacking Walmart here. Okay, this is something obviously much more sophisticated. But the point, my point is we waited for 3 years for something to break that we could do this, and that's what I mean by it's having controls in place that when how does it always happen? You get tired, you make a mistake, you click on the wrong link. If you click on a link and you realize that you don't have a lot of time, if it's a really sophisticated actor, like you have seconds, they'll be in there. Now they may not be all the way in, but they'll have their foothold, which is the hardest part to get the first piece. So, but there are things that I think, authentication is a great one, right? So I think like two-factor authentication is starting to get hacked a lot more, but it's putting it all together, right? Is passwords, second device, biometrics that also measure heat, so it's a live person, all these type of things that make it, what are we really trying to ensure? That it's you. So that can be done, some of that can be done with technology, some of it, you're going to have a human, but the bottom line, I think it's just healthy to remember humans make mistakes. So the question is, how do you stop it from making mistakes? It's what's the controls in place so that when a mistake is made, we can see it and take action in time before something bad happens. That's the way I approach it. It's a risk thing.
Great question.
Awesome. Thanks.
Yeah, I really appreciate you coming up and asking us, Gandalf. Carmen, you got a comment there?
I was going to say the whole hour just flew by so quick. And I wanted to thank Ed so much for taking stage with us today for such a great conversation. The insight that you have to some of these topics and the answers to some of these questions are so revealing and good stuff that we need to know. It helps shape, kind of where our actions are going to be as we take a look at our contribution in this space. For those of you in the audience, if this is your first time meeting Clear Cryptos, please, we encourage you to go to our website, join our Discord, say hi to Foxy, our community manager, ask your questions. We want to be engaged with you. We want to continue to bring people from our advisory board onto these spaces with Wolf to have great conversations like this, because this is our mindset, is how do we build for the future? How do we grow? How do we safeguard people that are being preyed upon in this space? And how do we set the tone and the standards for what this technology can really do? So Wolf, thank you so much for your time today. And I'll make sure to bring back another celebrity.
Yeah, you definitely nailed it tonight. And we didn't even go too deep into it, but there's some really cool stuff going on over at Clear Crypto. We briefly talked about the token. Ed is on the board of advisors. I recommend checking out the rest of that board of advisors as well. You can just go to clearcryptos.com if you're in the audience. This is pretty top tier exchange. Really, really nice UI, UX, straightforward, proven backgrounds on the board, as well as, the CEO, the rest of the team. You can hear Carmen on the main account here. So just some great stuff all around. And then I want to just give a big thank you as well to Gandalf. We had Kyle on here before asking questions, Ashley, Abbas for being a part of the space. Just great speakers all around. And you're definitely right, Carmen. That hour flew by. Ed, want to give you the opportunity for any final comments from yourself. Just anything else you want to share, and appreciate you joining.
Well, I just want to say thanks to everyone, and I appreciate the questions. I always learn as well. I believe in this technology. I believe we're going to see it a lot. We're going to see it grow in both breadth, scope, and scale, and I'm just proud to be part of it. And I appreciate, last thing, I appreciate all the security. And if I don't talk to any of you, just wish you a Merry Christmas, and 2023 is going to be a great year.
I love it. I love it. Before you go, we got one last question from John. He asked, are there any simple steps people should take to prevent phone calls from being hacked?
That's a big question there.
Wait, what was the full question?
He said, are there any steps to take to prevent phone calls from being hacked? If it's too much for now, there's no worries.
Well, here's what I would say. If you're worried about your phone calls, Ben, if you're worried about your phone calls, I would be using Signal. Okay. That's what I would do. Now, and to tell you, that's how I talk to senior leaders in the government. We use Signal.
Sounds like a plan
There's
to
the
me.
alpha. There's the alpha right there. And we end on that note.
There it is. Carmen, anything else you want to share?
No, thank you so much for the space. And I'm going to be welcoming people with open arms over in the Discord. So come on in.
Yeah, hop into the Clear Crypto Discord, take a chat with them. And then, Carmen, you'll be back on with us next week?
Absolutely. Yeah, we got to wrangle a couple more cats from our board of advisors to have great conversations. So we'll be in planning with John and I to get you some more people.
All right, I can't wait. I'm looking forward to it. This space was awesome. Thank you so much, Ed, for educating us. To all the speakers that asked great questions and were just, great presences as well. This is what spaces should be, right? Bringing people that have experience, knowledge, and sharing it with others for free. That is always the goal. With that being said, we'll be back on with Clear Cryptos next week. So if you're not following them, you could follow them. You could follow Ed, the rest of the speakers. And then if you want more content tonight, I'm not hosting anymore, but I'm going to be a co-host on another space. I'm going to hop to there now. So you can just follow my account, and that way you'll see it pop up at the top of your timeline. If you're done for the night, wishing you a great rest of your Wednesday evening, and I'll see you tomorrow morning for some live